excited to talk to you guys to give you little tips and tricks on chart reading to help you become better people as traders, not better people in life because you guys are already amazing. Good afternoon, Miss Jen. It is great to see you. Guys, remember, I'm the indicator reading guy. That's what I do. I teach you how to read indicators. Good morning, Steve. I teach you how to recognize advantages. I teach you how to recognize disadvantages because there's always two sides of a coin. Your job is to take your understanding and execute, to find a plan that fits you. Until you can do that, I'll hand you a plan that you're welcome to follow, but it will be your plan. There will be times where we disagree. There will be times where you don't understand. All I ask is that you raise your hand and force some clarity. Say, Mark, I don't get it. I don't understand. I think you made a mistake. Whatever it is, it's cool. I don't get upset. But let's have a conversation about it. And let's make sure that you walk out of this room with all the answers that you need. If you sit silently in the rafters, guys, you might miss something that you need. So be real vocal. That's what I'm getting at here. This is your class. This class is designed to be a discussion, not a lecture. So I'm looking forward to hearing what's on your mind and seeing what you did. Before we do anything, though, it is News 30. We're going to make sure that there's nothing high impact going on today. Today is Thursday, June 12th. At 8:30 a.m., we had 3 rounds of high-impact news. We had 1, 2, 3 red boxes. Did they do anything? I haven't been watching the market. Sometimes high-impact news can make the market spike and jump. High-impact news can create reversals. And sometimes it's just movement that's too fast to trade. So I check news every morning and make sure that I'm not in the way of news. I just typically go make breakfast, pour a cup of coffee, high five my wife, take the dog for a walk, anything other than jump in front of that emotional freight train. We are going to go to the Nexgen website. This is where all the answers come from. Pretty much everything that I say can be found here. Every now and then we freestyle a little bit, get outside of it, but reality is there's nothing that you could ever need that you probably can't find here as a brand new user. And let me say that, as a brand new user. Guys, I'm going to give you everything that you need to be successful with the software about when the first hour is over. I've already dropped it in the room. At 8:56 a.m. you'll see a post by me. It has a trade tracking sheet and it has a zip file called All You Need. And that literally is everything that you need. And I'm going to go through what's in there, how to use it, all that good stuff over the next hour. And what we're going to do is we're going to talk about a high probability trend trade. That's our first hour every day. Repetition, repetition, repetition. We talk about this high probability trend trade because this is a trade that typically wins 70 to 80% of the time. We define a high probability trade as a trade where each indicator on every chart agrees with the rules for the trade. This should give you warm, fuzzy feelings when you hear that. Wow, everything is in favor. I can't wait to take a trade. We focus on this trade most importantly because this is the trade that is going to help you learn to read your indicators. This is the trade that's going to have you looking at your screen and recognizing advantages. This is the trade that's going to have you looking at your screen and recognizing disadvantages. And the idea is that you take a trade when you have an edge, when you have an advantage, when the probabilities are in your favor, when you're looking at a pattern that has been proven to win more than it loses. And that's exactly what the high probability trend trade is. What you're going to find is that you spend a lot of time looking at your charts but not actually trading. Last night I was doing some work for Nexgen, and I had to go in and I had to execute trades just to get some stats and knowledge going. And I sit down and I'm like, okay, I'm ready to trade, but the market wasn't giving me my rules met. And for a moment I was put out. I really was. I was like, well, how the hell am I supposed to get anything done if my rules aren't met? And I had to go back and hear my voice in my head saying, Mark, 90% of your day is doing nothing. 90% of your day is waiting for advantages because those advantages produce an edge. And man, that's what trading's all about. So I actually had to go through it last night in my head and say, wait a minute, it's okay. Just because I'm ready to trade doesn't mean the market's ready to be traded for me. So we're going to focus on becoming patient. recognizing advantages and realizing that 10% of our day might actually be trading, while 90% is doing a whole lot of nada. But once you understand the three basic concepts of the high probability trend trade, once you can look at your chart and say, hey, I have these things going for me, you begin to understand where the market is likely to continue. And when I say likely to continue, I mean the market already has a trend. The trend is going, life is good, it's one way, and every now and then there's a bounce. There's a little fluctuation. You're going to learn how to identify exactly where that fluctuation is most likely to occur and use that likely to continue point for an entry for a high probability trend trade. You're also going to understand where the market is likely to go. You're going to use momentum indicators, these key Fibonacci areas, and you'll be able to say to yourself, I'm in this amazing trade, and because of these advantages, that's where this market is most likely to get to. And then finally, you'll understand where the market is likely to stop. And these are what we call termination conditions. And these are the lines that can stop an entire trend and make it reverse. And I want you to notice that each of these phrases says likely, likely, likely. It doesn't mean that it will. It doesn't mean that it has to. It doesn't mean that it should. It's very important that you realize that trading is probabilities. Trading is having an advantage and recognizing a pattern. And you'll be able to say, okay, when my market looks like this, 80% of the time it bounces, 20% of the time it does not. I don't know which one it's going to be, so you'll gauge your reactions based on those probabilities. And that's kind of what we're going to go through. We're going to talk about three rules that identify three advantages. This is all it takes for the high probability trend trade. This rules 1, 2, and 3 create advantages 1, 2, and 3. These first two advantages, the idea of momentum from rule number 1 and the idea of a clear path, nothing in the way to hinder forward progress. Once you can identify these two, once you're comfortable with momentum and path, what happens is it opens the door. You begin to see a lot of other opportunities in the market. And if you're brand new with me, I want you to notice today there's going to be a lot of trades presented in this room that revolve really around momentum and path. Entry area is just getting you into that high probability trend trade. Entry area is very specific to this trade. It's a definite advantage, but you're going to find more ways to enter using momentum and path. These three advantages are found on only two charts. Simplicity is a wonderful thing. I'm not a lot of moving parts kind of guy. Some of you are. Some of you love it. Some of you engineer and mathy kind of people, you love the complex. Guys, I'm a right brain thinker, so I teach as a right brain thinker. I try to keep it as simple as possible, as focused as possible, to weed out the things that aren't important so that I can focus on the things that are. So when we talk about finding a high probability trend trade, it's two charts. That's it. That's all it takes. There is a large chart. This is a slow chart. It's a very broad stroke of a brush, guys. And when you have advantages on the large chart, you don't really see the change. Those advantages tend to hold for a while. So we use the large chart to define the direction of the market, understanding which way we should be looking for our rules to be met. We define the momentum using just the most current bar on the large chart and the trigger lines. That's rule number 1. And we define the areas that could be problematic. 2/3 of your advantages, momentum and path. These happen on the large chart, and you will be able to recognize it by using only the first bar. When those first two rules are met, when you have those two advantages in play, when you have a market that is screaming in the direction of the trend with absolutely nothing in the way to stop it, you're going to go to a smaller, faster chart. And this smaller, faster chart is your entry chart. It is a refinement chart. And inside of that one bar, from the very bottom to the very top, you're going to see an entire retracement. And as it works its way back down inside of that very one bar, you're going to see the continuation with the trend very often. We use this small chart to refine the big picture, to pinpoint the best of the best entry. This will allow you to reduce risk. This will allow you to increase profit potential. So rules 1 and 2 are met without question. Let's go find an entry. And once you understand rules 1 and 2, the list of entries begins to grow. We use these two charts because I love metaphors, and there's two forces at work in the market, if you will. There's the large crowd, the men and women with money and influence to create trends, to build up that momentum, and they react right at those key areas that you already have on your charts. The large crowd typically wins. So following the large chart typically produces the best results. Your small chart is the fighters. This is the small crowd, and they are still loaded. Their uncle left them a pile of money. And they can create little rifts in the matrix, little retracements, little pushes against everything the large crowd wants. We rely on this small crowd to fight because when they do, they typically fail 70 to 80% of the time. Rule number 3 is going to have you pinpointing right where their failure is most imminent. This becomes your entry for the highest probability trend trade. So ask yourself when you're looking at it, who am I trading with? Who am I trading against? Large crowd typically wins. It'll take us about 35-40 minutes to learn the trigger line and Fibonacci rules for when it's okay to trade. You won't be an expert in 35 or 40 minutes, but you're going to have a solid foundation. We're going to break those 3 advantages down individually. You will know how to study them. You will be able to recognize them, and you will be able to say out loud the advantage that you see and what it means to you. Everybody should simulate, practice, get in, get out, learn the mechanics of NinjaTrader, guys. Practice entries, practice stop placement, practice moving things. And what happens is if you work on the mechanics of being in a trade while you're on simulator as well, when you're actually trading, those mechanics don't interfere with the analysis. The first step in becoming a confident trader ASAP is open dialogue with me, guys. Post in the room. Every time you post in this room, and I mean every picture that you post in this room is an opportunity for a private session. We're going to look at exactly what you did. Cav says, hey, look, Mark, my triggers are crossed down like a pair of scissors that are open. That means he has momentum. And then Cav knows that this area hasn't broken yet, but he's able to capitalize. You did take the momentum trade, and it turned right into a trend trade, which is what we're going to talk about. But because of his understanding, he held, he knew where his stops belong, and he was able to capitalize. And everything that Cav did here was solid. And it just made sense. There's the Nexgen momentum trade, turns into the trend trade and goes down. So every time you guys post in this room, we're going to talk about what you see, what you did, why you did it, where you did it. And my job isn't to say, hey, you did great or you did poorly. My job is to say, hey, you read your indicators correctly, or your read was a little bit off. Let me show you how to adjust that. And if I see anything through my 6.5 years of teaching people to read indicators that could be helpful in your endeavors, I will share it with you. I shared a couple pictures this morning for you guys that keep jumping into the market but wondering why those lines are creating bounces. My job is to help you read indicators more effectively so that you can find more success in the market. So post in the room. Take advantage of having a coach, of having a mentor. And then we're going to simplify. I will give you a plan. It has 2 trades on it. It has that high probability trend trade where all your indicators agree. And it also has what we call a medium probability trend trade. And a medium probability trend trade is defined as when most of your indicators agree for the trade. However, a small issue exists. You guys will be relying on your ability to read indicators to recognize that issue and to manage those trades a little more assertively. That's going to be on the plan as well. So your first 20 days with Nexgen, and I say that's 4 trading weeks, 20 days. It's about 30 days on the calendar, guys. I encourage you to focus on the high probability trend trade, to really break it down and look for advantages rather than money, guys, because it's the process that yields the results. So we're focusing heavily on the process right now. You've got to learn those looks so that they become easy, and that's the second piece to becoming a confident trader ASAP, and I've already dropped this in the room as well. This is the spreadsheet that's given to you guys every day. The first tab In green is what it means to have your rules met, time to take a trade. In red, what it means to not have your rules met. It is literally the opposite look of the advantage. Strong triggers versus weak triggers, clear path versus terminations. Know the difference between the two so that you can commit to finding the success. Hey, Rick, good to see you, man. The second trade, about 500 pictures of Nexgen users taking advantage of the software, finding ways to make money, sharing it in the classroom, and then when it's so good that I just can't stand it, I steal it and I put it in here. Go see these, because a lot of times when you look at what people have been doing, it's going to create a little more confidence and a little more awareness. There's a lot of little things that our brains tell us to look out for that we don't need to. You'll see it in these pictures. And I go back to these pictures a lot and click on them to remind you guys that there are things that just don't matter, and you'll begin to see those, and we'll talk about them. You NASDAQ junkies, I've got some ideas for you to find a little extra giddy up there. Ideas on management, patterns that repeat themselves. And then this is where you should put your pictures. I encourage people, I don't know if it's going to be big enough to see the math. If you take 15 pictures a day and you write on those pictures, this is what I see, this is what's going on, and make yourself a better chart reader. By the end of the week, you have 75 pictures. By the end of your first 30 days of study, you have 300 pictures. By the time you get to the end of 90 days, and I think 90 days is a pretty fair time to get in and get really comfortable, you're looking at nearly 1,000 pictures, guys. The more pictures you take, the more you're going to see. The more times you take a picture, you annotate, you talk about it, the more you're going to see. I'm at 4,060 for the year, and we finished last year at a little over 7,800. And you can see that there are pictures everywhere, and there are pictures that are annotated. They're your pictures, my pictures, study pictures. Guys, get in the habit of becoming a shutterbug, because when you take the time to type, so there's my typing sound on my desk. When you take the time to type, what you're doing is you're creating this little correlation between what your eyes see and what your brain thinks about what your eyes are showing you, and it really speeds up the process. This final tab is going to help too, because this is your trade tracking. This is your trade journal. And the trades themselves aren't as important for a brand new user. The wins, the losses, guys, it's all just insignificant, honestly, because you're on simulator. It's not real money. But every trade that you take is a lesson. Every trade that you take is a reinforcement. Every trade that you take is a red flag. So every trade that you take, I want you to take the time to annotate your charts, to go through and to talk about those three advantages. How did you read it? Some of us read it well, some of us are brand new, and we're still learning how to read it. But if you draw an arrow to what you saw, tell me what you saw, I'll make sure that you're reading it correctly. If you draw an arrow and tell me what you saw and you're not quite reading it correctly, we'll go back to the lessons. We'll make sure that you get some clarity. And when you annotate a chart this effectively, when you talk about these things, what you're doing is you're writing a recipe for success. You're writing a recipe so that these trades become repeatable, so that you can do the same thing because it provides an edge. And these will also identify challenges. When you go through and there's not the pressure of wins and losses, there's not the adrenaline of getting in and out, guys, and you start writing on this chart, and when you took the trade, you said, yes, I had strong triggers, and then you look at your chart after and you're like, well, that might not have been the strongest trigger I could have ever had. That could have led to why the market retraced on me. If you go through this process every day, drop your pictures in and really focus on these two advantages. Did I have momentum? Did I have a clear path? What you're going to find is that there's a lot more winners with those two than there tend to be without it. And then the feedback. Maybe you are trading in determination conditions. Maybe you're jumping in a little late because you don't trust the rules just yet. Guys, I'm going to talk about it, and I'm going to tell you, hey, if there was a challenge, here's how you fix it. Go back to that feedback, and what you're going to see every morning is that you did some things amazing, and you got high-fived and gold starred and attaboyed, attagirled. And then sometimes you'll see that you made a mistake, and that's okay. Mistakes are a part of the growing process, but I'm going to help you identify it, but I'm also going to give you a way to fix it. I'm going to help you stay away from that mistake. So if you come back every morning and you study the trades and the feedback that you got, what it does is it sets you up for the day. It sets you up to accelerate the learning, and it keeps you focused on the good things, and it keeps you focused on avoiding the bad things. And it is a proven path. Post in the room, track your trades. Post in the room, take a lot of pictures, guys. This has been going on for the 30 years almost that Nexgen has been teaching people to read indicators and day trade. And this path has been proven pretty successfully. This is my newest picture in the spreadsheet, guys, or in the PowerPoint. We crawl with the high probability trend trade. This is your introduction to Nexgen. This is your introduction to the indicators. This is your introduction to being able to recognize advantages, guys. This one high probability trend trade, it forces you to wait because it doesn't happen 173 times a day. The high probability trend trade, though, when you start looking for this trade, you start speaking in terms of advantages, guys. You start looking at your indicators and say, wow, this look is providing me this good stuff or that good stuff, or this look is pulling all that good stuff out of the equation. And then suddenly you grow and you start working on that second trade in the plan, and you're like, more opportunity, more ways to make money, more ways to capitalize on advantages. And then you start adding more trades should you decide to, and you're like, okay, well, now I'm not sitting still quite as long because I've got 3 or 4 patterns that I can recognize that are producing results. And then eventually you're like, wow, all of my study created this trade. I'm going to sell it to Mark for $23 and a bag of marbles, and maybe he'll start teaching it in Nexgen. That's Ron C. flying. So don't feel shackled. Don't feel like I'm weighing you down, like I'm this anchor telling you don't trade, don't trade, don't trade, don't trade. What I'm doing is I'm saying learn to read your indicators, learn the basic trades so that you can find the rest of them, so that you can capitalize and really use the software to its potential. Still ain't got no marbles? Yeah, I lost mine years ago. So I'm going to break these 3 rules down individually, guys. We're going to talk about strong triggers on a large chart because that produces momentum. We're going to talk about termination conditions because that can stop your clear path. And we're going to talk about entries, guys. And if you have a question, if you have a concern, if you need a little clarity, I want you to raise your hand. I want you to be real vocal. This classroom gets absolutely amazing the more questions you guys ask. So rule number 1, here we go. I slept a lot last night. You guys are in trouble. Large chart needs strong trigger lines. Why? Because we want momentum. So in order to have strong trigger lines, guys, you've got to be trading with the trend. The trend is your friend. And when the background on your large chart is green, the market's in an uptrend. I'm looking for rules to be met to be true for a high probability trend trade long. When the background is red, I'm in a downtrend. I'm looking for rules to be true for a high probability trend trade short. Remember, this first hour is the best of the best, highest probability way. In order to have strong triggers in an uptrend, my small triggers and my large triggers must also be green. In order to have strong triggers in a downtrend, my small triggers and my large triggers must also be red. So if the colors don't match, you're in a holding pattern. Your rule isn't met yet. To have strong triggers in an uptrend, it means that my small triggers, these 2 solid lines, the faster moving average, they have broken away from and created space between themselves and the large triggers, the slower moving triggers. And it's that space created between the small and large, that's what lets me know I have momentum. So when I have momentum, when I have strong triggers, the odds are favorable for the market to continue up. So we talk about odds favorable momentum as a separation between the small and large, a literal gap between the two. This is the best of the best look. The odds are favorable for the market to continue up. In a downtrend, your small triggers will be below the large triggers. There will be space between, the colors match. The odds are favorable for the market to continue down. So odds favorable momentum. You're going to see it annotated on a chart OFM, guys. This is the best of the best look. This is the highest probability look. And when you have odds favorable momentum, the market is likely to continue in the direction of the trend. When you have that odds favorable momentum, that's what we look for to have the potential to break key areas. Strong triggers, guys. It'll even cover some of the mistakes that we tend to make as new users. So strength is a definitive advantage. It makes me feel good. It's like a loaded semi, 150 miles an hour going down the highway. Momentum goes away, and the small triggers work their way inside of the large triggers, and we call this weak triggers. Strong, weak, opposites. When I have weak triggers, the odds are no longer favorable. When I have weak triggers, I have to tell myself anything could happen up or down. The market may retrace, the market could reverse, and when I have weak triggers, guys, that is when these key Fibonacci areas are most likely to hold. So one thing that I'm trying to do is focus on not only the very basic, but also the future for you guys. Strong triggers, brand new users. This is your best of the best. This is the driving force. This is the strength, the power, and the giddy up in the market. There is a transition between strength and weakness. And that's when the small triggers begin to work their way inside. When one line is inside, you can say to yourself, I still have momentum, but I don't have odds favorable momentum. And you'll probably find ways to capitalize on this as you grow with the software. And then even with weakness, you may speak to yourself in terms of advantages and say, I have so much good stuff that I'm willing to find a short. I'm willing to find a trade, even with a little bit of weakness. That's the growth process. But initially, let it either be strong or let it be weak. Because strength drives a market, weakness lets you know anything can happen. And I mentioned this is where key areas tend to be more likely to hold. That takes us to rule number 2. But before we get there, I just want to ask, are you guys good with strong triggers? That's typically the easiest lessons. A separation between the small and large triggers, and it doesn't even have to be a large chart. The rule is found on the large chart, but you can have strong triggers on any chart. It's only triggers. Yep, good. Termination conditions false. No terminations. Gives me room to the profit target. When I have room to the profit target, I have a clear path. When I have a clear path and momentum, oh, it's hard to stop that market, guys. Termination conditions can be areas on a large chart. We look for termination conditions on the big slow chart. I like to say it's a horizontal line on a large chart. Each and every one of these lines has the potential to stop the market. We're going to look at them. Here we're just going to name them. Divergence highs, that magenta line that prints off of a pivot, lets you know that there was a loss of momentum. That's what divergence means, loss of momentum in regards to the software. Divergence lows, losses of momentum at a low, you'll see a cyan line. For those of you that aren't color savvy, hot pink and baby blue. It's like going back to the 80s. You're going to see Fibonacci resistance. That's that solid red line. When the market is trending up, this is an area that may stop or reverse the market. Fibonacci support. It's that blue line that extends across the screen. When the market is trending down, this is an area that may stop or create a bounce in the market. You're also going to see these yellow 1-to-1s. These are Fibonacci areas that print in the moment, real time. In an uptrend, they may serve as resistance. In a downtrend, they may serve as support. And then you're going to see the mid-band, guys. And the mid-band runs through the middle of your chart. It's a moving average. When price is below it, it's magenta. It may act as resistance. When price is above it, it's green. It may act as support. So anytime you hear support or resistance, resistance is anything that may stop a market in an uptrend. Divergence highs, yellow 1-to-1s, Fibonacci resistance. Support is anything that may stop a market in a downtrend. Blue Fibonacci support, yellow 1-to-1s, cyan divergence lows. These are the areas where that large crowd makes decisions, guys. And that whole analogy, metaphor came to play because when John Novak was creating the software, when he was building this algorithm to create these Fibonacci levels, he had a friend in Chicago in the pits, and that friend's entire job was to know where the institutions were buying and selling. And of course, he couldn't disclose that. But what John could do is send his Fibonacci levels to this gentleman before the market opened and say, hey, am I close? And he'd say, you're within 50 cents. And John Novak would say, awesome, let's open the doors to Nexgen. That's when he knew he had it right. Guys, these areas are absolutely amazing, and they're notorious for stopping the forward progress of the market. So to define a termination condition, we will allow that large crowd to get there. And that means that price, those dynamic Renko bars, reach the area. Have an amazing day. Nexgen Jen says hello, everybody. Price reaches the area. Price gets to resistance. And when it does, the only thing that you have to do is ask yourself, where are my triggers? Price gets there, sets off the decision-making process. Your trigger lines will tell the story. Your trigger lines will let you know what's going on with that area. If the triggers remain below resistance, resistance is defined as a termination condition. Every time price reaches resistance in the moment, it will be a termination condition. Price reaches support. Where are my triggers? The triggers remain above. It's a termination condition. And rule number 2 says absolutely no trades into termination conditions. And it's really a big safeguard. That's what it looks like in the middle of the day. Live, price reaches resistance. Where are my triggers? I'm going to go back to the large chart real quick, and I just want you to see. This is pretty impressive, I think. From support to resistance to one-to-ones to support to resistance to support to resistance to a divergence low to resistance. And it just, guys, there's fights at every one of these lines. So we've got to know when we should not be trading into these lines. Rule number 2 says if the triggers remain below or above, absolutely no trades. Areas break. If they didn't, we'd be stuck in a range forever. This is what it looks like when an area breaks. So price reaches support and all the trigger lines are above. So in the moment, we're looking at a termination condition. We're saying to ourselves, okay, absolutely no trades into this area. I need to wait for the reaction. I need to see what the large crowd wants to do. They might break. They could reverse. Hell, they might just fight for an hour. I don't want to be a part of their decision-making process. So if price reaches, triggers are above, wait for the reaction. It's okay. The futures markets trade billions every day. You've got to capture 400 to get into the six-figure income. If this area is going to break, your trigger lines will let you know. First, you're going to see your small triggers. Hey, good morning, Cav. I like how you segregate me from the cool kids. Good morning, Mark, and the cool kids. I don't know how I feel about that, Cav. Guys, if your small triggers, your fast triggers smash through that area, but your large triggers are lollygagging a little bit, they're hanging above, they haven't quite made it, as long as you have odds favorable momentum, this lets you know that that area has the potential to break. We're using momentum to say, man, that area could break, it might break. All that momentum suggests that the possibility is there. If you take a trade, and this is the second trade on your plan, you've got to manage these assertively because even though the potential is there, it's not quite broken. And rule number 2 isn't quite true. An area is considered broken when both small and large triggers get to the other side of the area. And this is a breakout. So first it's a termination, and then it has the potential, and then the area is actually broken. And this is your clear path. And your path remains clear as long as you haven't reached the next area. So when we talk about finding a clear path, I've got a pretty good picture for it. There's 2 ways that you're going to get it. The first way is that Fibonacci breakout. That's when the small and large get above the area. Once that area is broken, it is clear path all the way to the next area. It doesn't mean that it'll get there, but it means that there's nothing in the way to create a bounce. You'll also get a clear path when those triggers roll and everything is going down and you haven't reached the area and you're not trying to break the previous area, your path is clear all the way down to Fibonacci support. And you're going to see this a lot. So you can get a clear path by patiently waiting for a breakout, or you can get a clear path from a reversal at a fib. The easiest trades that you will ever take will have both momentum and clear path. The highest probability trade that you could ever take will have both momentum and clear path. Guys, this is what we're talking about right now, being able to recognize two advantages so that you can capitalize on it. And when there is nothing in a way and a market is pushing, it's more likely to get to the next area. And when there is nothing in the way and the market is pushing, you're more likely to get to the next area. These tails that you see in that one bar on the large chart, that's that retracement on a smaller chart. That's that small crowd fight on a smaller chart. We do not trade the tails. We don't take entries on a large chart. These are after the fact things, but every time you see one, you can say to yourself, man, that may have been an entry. There may have been opportunity. I'm going to use these to go back and study. And you'll see that they do in fact happen. Where is that large chart again? Whoops, that's a small chart. Let's get a large chart. There it is. Very often you'll see these pullbacks on the large chart, and you can say to yourself, this may have been an opportunity. With the potential to break, that may have been an opportunity. Where's another one? Didn't quite reach resistance, I think. That may have been an opportunity. Potential to break, that may have been an opportunity. And guys, you'll go back and study these and say to yourself, hey, I wonder if my rules for entry were met. I wonder if it was, in fact, an opportunity. So with momentum and path, guys, you're done with a large chart. Once you identify strong triggers, once you say the market hasn't reached the next area, I've cleared the previous, it's time to go look for an entry. Let's take advantage of these advantages, guys. But there's only one termination condition, guys. There is one time, solamente uno, one time on a small chart that I will say to myself, man, I'm not going to take that high probability trend trade. I'm not going to take that trade even with those great advantages, because three divergences have printed in the same price range. Three divergences on a small chart is enough to stop a trend. Rule number 2 is not met. It's a termination condition. It could terminate a trend. It could create an untradeable bounce. It could reverse the market completely. Guys, three divergences in the same price range is the only time when I have momentum and path that I choose not to enter the market because my path is no longer clear on a small chart. But if it's not there, we're going to go embrace a little precision, guys. We're going to get some accuracy, and we're going to do it by taking those large chart advantages. Let me find my picture here real quick. We're going to take those large chart advantages. We're going to take that momentum, and we're going to take that clear path, and we are going to refine it, define the entry point, and then hope for a continuation, guys. So in this one bar on the large chart with momentum and path, all of this is happening, and there's a very definite recipe for finding the accuracy. It's so accurate, you're going to use a limit order. And you're going to have that limit order waiting at an area, at a fib, at a mid-band, at a yellow 1-to-1, because the same way areas on the large chart create bounces, they can do it on a small chart. But we want that area to be inside of triggers. John Novak just posted in the room for you guys. Everyone should watch this 2 to 3 times a week until you no longer need it. Trading psychology. Thank you for that, John. Psychology is probably the biggest struggle you guys will ever have. Doing nothing is a lot harder than it seems, guys. But let's go define an entry. When I have the rules met on the large chart, when I have odds favorable momentum, when I have a clear path, I'm going to go to my smaller, faster chart. Your smaller, faster chart is going to be moving up with a lot of velocity, same as the large chart. But even though you're going to feel like you're missing out, you're going to feel like the market's going without you, you're going to be wondering, how will I make money if I don't ever get that pullback to an area inside of triggers? And then you get that reversal bar. Guys, the small crowd fights. It's just a pattern. This pattern happens every day. The reversal bar begins the pullback. The reversal bar is the first step in defining your entry. It is not your entry. And when you get a reversal bar, you're going to be able to do a couple things. The first thing you're going to do is you will be able to define where the retracement is most likely to go. And that's the trigger lines, large and synthetic. The large triggers, the smooth triggers, are native to the 5-1 chart, guys. They're a part of that math. And you'll use those with the small triggers to define momentum. The synthetic triggers, the stepped triggers, those are the large triggers from the large chart. And there is this gospel truth that because these are moving averages, price returns to the moving average. It always does. It happens all day. You'll see it on large and small charts where price pulls away and snaps back, and it does it over and over. So we use both large and large from the large and large from the small. And this is going to increase accuracy, guys, because when you understand where the market's most likely to retrace, you've got a very solid range to look in. But trigger lines are not bouncy. We need something in there, a fib, a mid band, a yellow 1-to-1, because these are your brick walls and the price bars are your tennis balls. These areas, fibs, mid bands, yellow 1-to-1s, inside of triggers are where the market's most likely to bounce. Most likely to continue in the direction of the trend. Sometimes there's multiple areas, and we create what I call the window of opportunity, guys, from the highest point to the lowest point. And every time that reversal bar prints, you'll say to yourself, the market may retrace to the bottom of those triggers. The market's most likely to bounce at the areas within. Because the large chart is pushing so strong and there's nothing in the way, your job will be to activate a limit order a tick or two above that highest point of support. That becomes your entry for the highest probability trend trade. Any line, any fib, any midband, any yellow 1-to-1 beyond the retracement zone, guys, on what I call the wrong side of the triggers. This is where the advantage of rule number 3 is no longer in play. This is where your rules are no longer met. We're going to call anything below the triggers for a long trade where the market should not go. And once you get into the zone, you don't know if, when, or where that market may continue up. Let me read Victor's message real quick. I was up at 5:15 a.m. and there was a great opportunity on crude that would have paid gold 27 bars. Then there was 2 more opportunities, but you chickened out. Mark D thought it was a good read. That's what I was looking for. I am assuring my reads are happening. No picks. Victor, it is going to be just difficult for me to give you feedback on your read if I can't see your read. Let me show you a cool trick real quick. And a lot of people forget that you can do this. Look at that. I can scroll back and I can go to 5:15. And are you talking about somewhere right around here? And I can circle that tail. And I can go to my smaller, faster chart and I can see what's going on at 5:15. And you do have momentum. And is that not, oh, that's the S&P. Thank you for that. Sorry, guys. Oops, that's NASDAQ. There we go. You guys will realize I'm not as smart as I wish I was sometimes. All right, let's go back to 5:15. So everything is screaming down. Let's go back to 5:15. $5.29. And so I'm not going to say whether it was a good trade or a bad trade. What I'm going to say is whether or not we had rules met. So at 5:15, we're looking somewhere right in this range. And that is a market that has been going down for a while. Victor, do you have strong triggers? Because if the read is okay, so here we go. This is where the lessons come in. Let's talk about what it means to have strong triggers. And I'm going to go back to the picture that I used to teach. Strong triggers in a downtrend is a separation between the small and large. You literally have to have a gap between the two to define them as strong. Does that make sense, Victor? When the smalls return, we call them weak. And this is one of the reasons while going through and being able to determine the two creates an advantage. So without separation, I'm kind of inclined to say I don't really have the strongest triggers ever. It's not my best look. It's not horrible. I'm just saying to myself out loud, maybe this isn't the greatest look I could ever have, right? Talking in terms of advantages. And then I say, do I have a clear path? And again, I have to say to myself, you know what? My small triggers are making it through. My large triggers aren't. This one certainly has the potential to break. But let me go through this real quick. I want to see how long that market has been pushing down. So right around 515, we're looking at a market that has been pushing. It's got about 30 bars. You're doing great. That's awesome, Victor. Let's talk about the one that you're talking about before you present the next one. So everything is down. There's no doubt about it. You're below this fib, but you haven't quite cleared this fib. And you can see the reaction. Victor, do you see the reaction coming off of that Fibonacci area? There's a bounce, there's a spike, there's a reversal, and it's just not quite perfect. And then, and this is not a high probability trend trade, but this is where you're headed. Your indicators turn, and your indicators on the small chart start to agree with the indicators on the large chart. And you're like, wait a minute, now everything is going down. It's been going down for a while. If I were going to take a shot, maybe this is it. And it does. It runs down. And then if you decided to be patient, Victor, because you really want a clear path, that little snapback to the fib is an absolutely beautiful next-gen momentum trade. So there was opportunity there for sure. There was the, I'm an awesome chart reader, I'm waiting for everything to agree trade, which is a little more lower probability because it does trade directly into a Fibonacci area. Or there's the, you know what? There's too many opportunities in the market. Let this break. Let me let the momentum come back. And there is my momentum trade to push me down. And so you're absolutely right, Victor. There was opportunity. The great thing is the more you learn to read your indicators, the more opportunity you see. The more you begin to recognize advantages and speak to yourself in terms of advantages, the more opportunity there is to see. And a lot of times you guys start to see this opportunity outside of the high probability trend trade before you even recognize the high probability trend trade. Some of you are gifted and talented. I love it. So good job, Victor. Everything says down and you're looking to go down with it. That is a great basis. Strong triggers, clear path, pullback, area inside of triggers, looking for continuation. Everything says down, the trend is strong, waiting for the reversal bar, defining the retracement with the trigger lines, defining the entry with the area within, activating a limit order 2 ticks below the area closest to the reversal bar. Anything on the wrong side of the triggers is advantage lost. Guys, these are your entries, and when you take the time to learn the entries, and there's a lot of opportunity, Victor, you just proved that. But when you take the time to learn the high probability trend trade, when you take the time to recognize momentum, to find path, to define an entry, your understanding of where the market is most likely to continue, it also provides the understanding of where the market should not go. And your initial stops for these high probability trend trades will be placed where the market should not go. And that's generally 4 to 5 ticks above all the trigger lines for a short, or 4 to 5 ticks below all the trigger lines for a long. And what you're saying is, I have these 3 advantages. I've defined the perfect entry. I've taken the ideal trend trade. If this trade isn't going to work, I have defined where my advantage is gone, guys. And anything that wins 70 to 80% of the time, I want you to accept and realize that it will lose 20 to 30% of the time. I never know. I have never in the history of my trading known whether or not a trade will win or lose. because I just don't know. I'm not in control of the market. But what I do know is that if I trade this pattern and I go back and take 100 pictures of that exact pattern doing the exact same thing every day, that this is a pattern that I can prove wins more than it loses, which means that I have an edge, which means that I'm less focused on the outcome and more focused on the process that typically creates the outcome. So we're going to learn this pattern. There's so much opportunity once you understand to identify momentum. So when we talk about momentum, the trick for you guys that seems to be the most effective is, in order to have strong triggers, your trigger lines must look like scissors that are open. Your trigger lines have got to have space between them. Scissors are open because when scissors are open, you can cut. You can get work done. They can cut you a check. Thanks, Jerry. When your scissors closed, when those blades are together, when you no longer have any separation at all, guys, you can't cut. You can take a stab at it, but you can't cut. So learning rule number one, having that advantage of momentum, you can start saying to yourself, I need my scissors open. And then what happens is when you see those scissors close, it doesn't mean that there's not an opportunity, but what it means is, look how we circled back. Strong triggers? No. I know that anything can happen. So if I choose to enter the market, my guard is up for change so I can manage. When you recognize that one of your advantages are gone, all you're doing is you're saying, okay, I know what I'm up against, right? And I may have to look for a little change on the small chart if for some reason this momentum doesn't push the market. And if you took this entry, you never got that change and it becomes an easy trade. And if you took this entry, you never got that change until down here and it becomes an easy way to capitalize. But what it does, guys, is when you recognize, hey, one of my advantages is gone, it gets that management hat on. That's next level trading, and you're going to see some great examples of that today. So let it be either strength or weakness, just so you know which is going for you or what's against you. Let it be a clear path or a termination condition, so you know what you're up against. And initially, it needs to be strong triggers, right? It has to be a clear path. And when you take this trade, when it's time to look for an entry, the market is all the way up here. And a lot of you say, but Mark, all the way up there, there's only 8 ticks worth of room to get to that trouble spot. That's not enough money to take a trade. This is pretty common. And this is where rule number 3 comes in, because rule number 3 says buy the pullback, guys. And the pullback happens inside of that bar. That's what creates the tail. And it says with all that momentum in the path, it's most likely to get to that divergence high. And your 8 ticks of potential profit turns into about 30. So that's about a $300 trade as opposed to an $80 trade. If you just jumped in at the top up here, where the market shouldn't go is still down here. You've increased risk dramatically, and now you're stuck with that 8 ticks of profit. If you didn't let it get to the area, if you got scared and jumped in because you thought it was going without you, that 8 ticks is maybe 16, not 30, and your risk is still elevated. But if you wait for the perfect entry, guys, great entries create manageable trades. You have the least amount of risk on this trade, and you have the greatest amount of room to get to trouble. And that's why we study this pattern, guys, and that's where those tails come in. The tails are not your entry. I'm going to show you how you can use those tails as a study tool. So let's go. This is crude oil today, right? Oh my gosh, that's a 34.5. I think I was messing with settings. Let me build the correct chart. Sorry guys, I was doing some testing earlier. Let me build the correct chart. Victor, I want to go back and see your trade again because I have a feeling it was much better than I led on because I was looking at the wrong chart. So I'm building it off to the side here real quick. And let's get rid of that nonsense. Don't need it. Victor, I may owe you an apology, my friend. I thought that didn't seem like a lot of movement. Now look at it, Victor. Now we have odds favorable momentum. Now we have the potential to break. Victor, if we ever meet face to face, I owe you a beer, my friend, because I had the wrong large chart. The momentum trade is still outstanding, without a doubt. Small chart doesn't change. With the potential to break and all that momentum, the entries still stay the same. But Victor, do you see how the large chart has such a better look? Now we've got separation. You are absolutely right. There was strength. There was a lot of strength in that market, and it was coming from what we call a strong top. And this area had every potential to break because of that momentum. And respectfully, I apologize. You still had to wait a little bit. You still had to wait for indicators to agree. But man, that look is 20 times better. Do you guys see the difference? I am human, Joel, and boy, don't think it doesn't bug the crap out of me. One of these looks is anything can happen, but the real look is odds favorable with the potential to break. So I love it. Nice stuff. Let's go back and look at some tails, guys. I want to open up this large chart, and I want to look for momentum. Here we go. And that has the potential to break. Can you guys give me a Y if you see it? The scissors are open. That's the first step. And let's take off that cheater because we're going to go back and find this entry. Do you guys see how the scissors, and new users, please play along. Renato, good to see you back in here. I'm going to go through my process. This is what the market looks like. And I'm saying to myself, I think it's time to take a trade. So I ask myself, this is every time I look for a trade. What color is the background? It's green. Looking for rules up. That's it. Do I have strong triggers, guys? What do you think? Are the scissors open on the most current bar? You don't have to play along. I know how to do this. I'll do it. Yes, absolutely they are. And then we ask ourselves, do I have a clear path? And guys, there's three options, right? It's either a term, it either has potential, or it's clear. So which one are we working with here? The smalls have absolutely smashed through. The large are dragging behind a little bit. It's not a termination because the small triggers got through. It's not a clear path because the large triggers haven't made it yet. Guys, I'm working with potential. May need to manage. That's all it means. I may need to manage it. So because I have strong triggers, because it has the potential to break, now I go to the small chart and I look for my entry. And guys, look at this. It's gone, right? That market is gone. It's not coming back. I'm never going to make money. Going to live under a bridge and eat beans with a stick. That's what's happening here. So let's go through the process of identifying an entry together. Does anybody remember what the first thing we need is? Everything says up. I need my small chart to tell me that the fight's on. What identifies that? I don't know. Me either. How about a reversal bar? A reversal bar signifies the beginning of the fight, guys. And from this reversal bar, I'm going to do a couple things. I'm going to say the market may retrace somewhere inside of these triggers, somewhere from the top of the trigger lines to the bottom of the trigger lines. This is where the market's most likely to retrace, guys. Where's it most likely to bounce? The mid band is right at the very bottom of the triggers. Fibonacci support is right at the top of the triggers. Guys, this one creates a little bit of a conundrum because if I get in at 67.40, I don't have a lot of room to get to that fib. There will be times where instead of activating your limit order at the top of the triggers, you'll say to yourself, I'm okay not getting in at the top I'll force them to come to the bottom because that gives me room to make profits. So we'll do both. You're either going to put a limit order right here and accept that you may get smaller profits, or you're going to put a limit order down here and say, I know that I run the risk of missing the trade. If you took the top one, you're in at 67.39. You're long and you're hoping the market goes up. If you chose the bottom one, well, you had to move it up to it. You're in a little bit lower. Both of these are in the retracement zone. Both of these are at areas within the retracement zone. Some of you will get in high and then you'll add on low because this market says it's more likely to go up. Where shouldn't the market go, guys? The market should not go 4 to 5 ticks. Whoops. So we go 1, 2, 3, 4, 5. Market shouldn't go 4 to 5 ticks below the trigger lines. Let's see what happens. There's a reversal bar, and there's continuation up to the fib. Do you guys see it? Odds favorable, potential to break, and it pulled right back to the lower area inside of favorable large triggers. That's a good looking trade. Jen knew it. Odds favorable, potential to break, pulls right back to the areas inside of triggers. That's the S&P. That's the same pattern. We just did it on crude oil. Jen just caught it on the S&P. Beautiful trade, Jen. And the trade that Jen took on the S&P at 9:48 a.m. is the exact same pattern that we saw on crude oil at 9:50. Pretty outstanding. So we're just trading the pattern. And look at where the tail on the large chart, we don't even see it yet. That tail happens to be, whoops, the lowest point of the move, right at an area inside of favorable large triggers. So guys, this is all we've talked about today. If you really want to get good at reading your indicators, if you really want to get to the point to where you can do it fast, guys, there's a way to do it. It uses a spreadsheet. Go take pictures of strong triggers. Go take pictures of weak triggers. Annotate them. Why are they strong? Why are they weak? Learn these looks, guys. Study these patterns. I'm going to give you some stuff that's going to help you guys as you're just getting into the market, as you're just learning. So Pete took it like a sniper. Joel took it like a sniper. So guys, these are two different people in two different parts of the world with two different backgrounds taking the exact same trade at the exact same location because all we're doing is identifying a pattern. Pretty neat, right? I love it when you guys do that right after we talk entries and you show that that's how you find the entries. So the easiest way, guys, first, learn to recognize momentum and path. This sheet will help. I've given it to you at the beginning of the classroom. As you go take pictures of things, guys, I've got a checklist for entry with what it looks like to have the rules met and a checklist that you can print out and put on your desktop. Write these rules on the chart every trade you take, even if they're not true. My rules said I had to have strong triggers. Well, I had to mark no. Here's why. Lost sound. Guys, give me a Y if you can hear me, please. Is it just Jen? Can you guys hear me? Anyone? Pete's got me? All right, Jen will know to reboot. Guys, if you ever can't hear me, always tell me. And if you see a bunch of people print a Y after you say I lost sound, it means that it's probably on your side. Jen knows that. She'll reboot and come back. Guys, this checklist, nobody's ever been able to answer it honestly. It's okay, Jen. You're back. Awesome. Catwalk across the mute button. Nobody's been able to do worse than 70%. So I encourage you guys. Internet just dropped. Uh-oh. Write this on every chart. Write that on every chart. Go through that checklist on every chart. Even John Novak was in the room yesterday, the day before. He goes, man, there's a lot of people posting trades and none of them are using the checklist. How come? I don't know. It's because they don't want to. That's on you guys. That's not my cross to bear. So use the checklist, write the rules, give yourself the biggest fighting chance. And then I'm going to give you the KISS plan, guys. This is the plan that I promised. This is a plan that is a stepping stone in your learning journey, and it's designed to optimize your chances of success with the high probability trend trade. This is the plan that can be proven that it wins more than it loses. This is the plan that teaches you to read your indicators, guys. It'll be through study, through feedback, through simulation, through practice. You'll be empowered to craft a plan tailored to your personal goals based on your ability reading the indicators. Guys, I'm not shackling you down to a high probability trend trade. I'm giving you something that optimizes your chances of success as you learn to find your trades. The entry is defined. It is if then. It's very mechanical. If there are no terminations, or if there is a termination that reverses the market, it's not mandatory. I'm going to look for strong triggers. If I have strong triggers, then I'll look for no termination conditions. If no terminations are present, then I will define an entry at an area inside of triggers. Boom, I'm in the market. Now I have to manage it. There is a saying that great traders manage their risk before they ever manage profits. I love that because you guys are managing your risk by having odds favorable momentum. You guys are managing risk by not trading into termination conditions. And you guys are managing risk by getting into the market where the market is most likely to continue. You have already given yourself a truckload of goodness. Now it's time to manage. And this is where profits are won and lost. It's what you do with that great entry. So the KISS management plan is just as mechanical as your entry. It's 100% if then. It's based on 2 contracts, and it's designed to help you understand stop placement, recognizing where the market shouldn't go, and it's designed to get you focused on getting paid, guys. That is the goal of day trading. The goal of day trading is to let more money fall into your account than you allow to fall out. That's why we trade edges and advantages. So you'll create your own management plan. You'll get to a point to where you're like, I see things faster, more effectively, and a little bit differently. I'm going to manage trades differently. And that's on you. That's what you're going to do as you grow. Until you can do that, keeping your management as mechanical as your entries helps remove an awful lot of emotion. So Roy, I have a question mark. So let's say everything is good on the big chart. Do I have to wait for the pullback from the small chart before I set my limit order? Or the pullback has to come from the big chart? Thank you a lot. Great question. The first answer is you can do whatever you want. But let me show you how this works. So Roy, you're saying the big chart's perfect, right? The big chart is amazing. I've got all the advantages. I have to go look for an entry. If you look at your small chart right now, Roy, you would say, well, this is where my entry's coming from, right? Roy, what you're showing me is that you already understand the process. You're like, this is where I want to get in. If I get a reversal bar, I already have my sweet spot, right, Roy? I want to make sure, cool. So absolutely, right click, set your limit. They're not going to just arbitrarily get it. To get it, what do they have to do? They have to give a reversal bar. They have to give a pullback. It doesn't mean you didn't know where that trade comes from. And guys, that's a growth process. And Roy, you will call your shots. In a live market, you'll say, everything is up, my rules are met. It's not even there yet, but dang it, that's where I want to get in if I'm going to get it. And that's one of the things is when you recognize a pattern, you begin to know where the market, where your entries are. And that's a sign that you understand the concept. That's a sign that you know the pattern and you know exactly what should happen. You know exactly where it should happen. And now because you believe in the advantage, you're just waiting for it to happen. And it's a wonderful feeling when you get to that point. Did that answer the question? You will call your shots. There's no doubt in my mind. You'll know, and let's see, maybe the other market's given us an opportunity. So exhibit A, I have the potential to break. I have momentum. I had a strong bottom. I knew exactly where my lowest point of support inside of triggers was. You may have called your shot, and that may have been the one you were talking about. And the same is true as you pull back. I think this was Jen's trade. Jen said, I have momentum. The path is amazing. Life is good. I can't wait to do things. And she knew exactly where her entry had to come from before the market ever gave the pullback. The market was trading over here, and Jen was like, Phew, market, you've got some work to do. I need you to get back to this area inside of triggers. And then when it did, Jen was like, ha ha, I was waiting for you. Great question. Great question, Roy. And it really is cool. You will begin to call your shots. You will begin to recognize these patterns, and you'll be ready to enter the market long before the market gets to your entry. Good morning, Wayne. Um, and then once you're in, we'll start managing, right? So I'm going to go through the KISS management plan. Remember, stop placement, getting paid. That's the goal with this plan. Keep it mechanical. So if my entry is 2 ticks below resistance inside of triggers, that sounds familiar. High probability trend trade entry. Well, then my initial stop is 4 to 5 ticks beyond the triggers, guys. That's where the market should not go. This is me saying this is the pattern, and 4 to 5 ticks above this line, I no longer want to be in that trade. I no longer have an edge. My rule number 3 is no longer in play. And guys, you're going to know your risk before the trade is ever entered. And Roy, that goes back to what you just said. When the market is on its way down here, you know where your entry goes, which means you know where your stop goes, which means you know what you're getting into before you've ever gotten in. You have to accept the risk. That's one of the things that's hard to do for new users. I have to accept that this $150 per contract is the correct risk for this pattern. It is where my advantage goes away. And until that advantage goes away, I can't wait to enter the market and hold the position in a trade that can be proven to win more than it loses. Your targets are predefined at $100 and $200. So if they don't stop you out, and they will stop you out on occasion, guys. Sometimes the small crowd eats their Wheaties and they push and they stop you out, and you're gonna feel, oh man, what did I do wrong? And the real answer is you didn't do anything wrong. You did everything perfect. This is just a cost of doing business. But if they don't get you, guess what? They're going down. They're going down from the area inside of favorable large triggers with all that momentum in a clear path. And that's going to allow you, when the reversal bar prints, to redefine your risk, to say, this is where the market should not go. 2 ticks above that reversal bar, because they are doing everything that I hope they would do. So now you have $30 per contract. Cav, you met your goals at 10:12 a.m. and now you're switching to simulator because you know the goal is to get paid. Why give it back? I love that. That is discipline, ladies and gentlemen. So now you have $30 risk per contract, guys. You still haven't hit your first target. We haven't guaranteed that we won't take a loser, but we have guaranteed that we will take a much smaller loser if things head back up. And now there's nothing to do again. So if they don't come and get me, that means that it went to the first target. The first target is $100 away from the area, or from your entry. That's it. First target's pretty easy to hit in a high probability trend trade. And guys, this is the success that you wanted. This is the confidence building. This is your sweaty palms drying up and your pulse slowing, because those $100, that $100, it goes into your account. You can't give that back up. It's gone. That part of the trade is over. One contract is off. And now you're going to move your stop to break even. And I don't use the phrase where the market shouldn't go, because break even is just below resistance inside of triggers with those large chart advantages. But this break even stop, guys, after you get paid, what it does for you is it creates the confidence to hold for the second target. It creates the trust in the large chart momentum and clear path. And you're either going to get stopped out break even and only make $100 in this moment of your life, or it's going to go to the second target and it becomes a $300 trade. And that $300 trade feels great, and you're out of the market, and there's no more stress, and you are a rock star. People want to be you. And a lot of people in this room say, but Mark, $300 is baloney. Well, it's actually grade A baloney. I need to make more than that. Guys, this is $300 over the course of 2 or 3 minutes in a market that trades about 10 hours. It is a drop in the bucket. But if that is the best you can do every day, it's a $75,000 year. If you shut it down at $400 a day, the way Cav shut it down with his goals met, you're looking at a six-figure income based off of your trading. Guys, that is pretty outstanding for really only being active 10 to 20 minutes a day in a market. But the goal is that you're active when it's time to be active, and you are inactive when you don't have an advantage, when you don't have an edge, because you could take the perfect high probability trend trade, you could make that $300, but if you preceded it with 4 trades that broke rules and lost, you're still down money. So focus on getting paid consistently, using the best of the best. You'll find more ways to get paid. It is consistency that creates long-term success, guys. And that is my first hour. My first hour is dedicated to entries, guys. My first hour is dedicated to understanding when I have the advantage of momentum, when there is a clear path or the potential to break. And sure enough, that one made it to the lowest point of support inside of triggers. It never went where the market shouldn't have gone, and it just finished the move up to Fibonacci resistance. Pretty awesome, right? Maybe somebody in the room took that one. Guys, there's a lot of opportunity in the market today. I keep seeing it over and over and over. And if you go back and circle these tails, you'll begin to see it too. You'll begin to recognize that there is a lot of opportunity to make money, and that it's okay for me to be inactive for 5, 10, 20, 30 minutes, because the next trade is coming, guys. The next trade is coming. So that's my first hour. Welcome to Nexgen. Welcome to chart reading. Welcome to indicators. Learn to read them so you can make some good decisions, guys. The second half of class is going to be dedicated to your chart reads. The second half of class is going to be dedicated to your questions, to your needs, to your wants. Anything you need, drop it in this room. Let's talk about it. But here's my disclaimer as we get into the second hour. And I'm going to tell you guys, this was written in response to an email that I received from either a gentleman or a lady. I won't rat anybody out. And they were mad as hell that I was saying nice trade to people that was breaking rules. They were so upset that I would tell somebody that their chart read was amazing and their execution was awesome, but it wasn't a high probability trend trade. And I think sometimes we forget that the high probability trend trade is our stepping stone. It's what makes it so that we can see more and do more and find more and capture more. So guys, the key to everything we do is having a foundation. This first hour has been focused on nothing but one trade, the best of the best, teaching you to read your indicators. Grow from it. Realize that you will grow from it. So for you brand new users in this room, I blanket you with very conservative rules when we talk about this. We talk heavily about the recognition of advantages, knowing what's good, what's bad, so that you can make good decisions. And I hand you a plan, a solid plan that optimizes your chances of success as you learn to read your indicators. It's a very narrow scope in the beginning. So for all new users, you will feel like no momentum, terminations, areas outside of triggers. All of it is absolutely horrible, detrimental to your financial health. And those blanket rules increase your likelihood of success. Those blanket rules increase the odds that you will win more than you lose, that you'll develop the confidence that you'll find the trades beyond the basic trade. They're not always bad. And that's what I had to tell this gentleman or lady, is that they're not always bad. It's your experience that opens those doors for you. The more time you spend with it, the more you see. And then here is the little warning for new users. You've got to learn a process that yields results. You need to recognize a pattern that can bring you success more often than it brings you failure. That's having an edge, and that's where the KISS plan comes in. And if you can keep it that basic, if you can follow simple rules and learn simple rules initially, and if you're okay not looking for all the trades, understanding that there's a lot of opportunity, but choosing not to pursue it until you're good at this one trade, guys, you can find an extraordinary level of success. And I've watched it for the years. And the further that my new users deviate from the simple, the more they try to find before they understand the advantages that produce it, very often the longer it takes them to become comfortable. Some people come in and spin their wheels for a week, and some people come in and spin their wheels for a year. That's going to be up to you. That's going to be dependent on what you're looking for and the study time that you put into finding it. Question everything, guys. Don't let me not answer a question. Don't let me not be clear in the way I describe something. Just raise your hand and say, "Hey, Mark, I need you to say that different. Mark, will you go back over this?" And what I'll do is I'll try to say it different anytime you do that, and it makes me a better teacher, and it makes this classroom a better classroom. So as we get into the second hour, don't be the trade police. Focus on the advantages. Focus on the things that are great. And when you look at this spreadsheet that I gave you guys and you go to the client trades, I even had to put the disclaimer up top. These are the client's perfect trades. This isn't the one trade Nexgen teaches and the only way to do it. This is the way clients are making money with this software. And even more importantly, in all of these, you're going to see the perfect trades. And because I'm so confident in its ability to win more than it loses, you're going to see the perfect trades and losses. Because if you show me this picture 10 times, you're probably going to show me 7 or 8 winners. And every now and then there is a cost of doing business. So we're going to get into the second half of the day, guys, and we're going to do it focused on momentum, path, and entry. Every chart presented, I will discuss momentum, path, and entry. So your job, if you truly want feedback, you need to discuss momentum, path, and entry. If all you want to do is say, "Hey, Mark, I wanted to post in the room because I think it's important that these new users understand how much potential there is with the software," and you want to brag a little bit, and I love it when you guys brag a little bit, I'll still do the read on your chart, but we don't have to turn it into lessons for you. Where's it coming from? What did you see? Where did you enter and why? Every chart, guys. And if you go through this, you're going to get to where you want to be faster. So I'm going to go stretch my legs. I'm going to take a break. I'm going to relax for a second. Probably scratch my dog right between the ears. She loves that. When I come back, we're going to start clicking on all your charts. We're going to start talking about them. And guys, I really want to answer any questions that you have. So before I walk away, and Ron's laughing because he knows that I suck at leaving the room and taking a break, I am going to reach out and plead with all of you people that are sitting on the sidelines, not showing me charts. You're in here for a reason, guys. And I'm going to tell you, Tiger Woods, Michael Jordan, Wayne Gretzky, I'm aging myself, Serena Williams, John McEnroe, Fran Tarkington, whoever you want it to be, they all had coaches. They all had mentors. They all had people that sat on the sidelines and watched them perform and said, "Hey, here's how you can do it just a little bit better." So, Rick, as you're starting to mark charts, drop them in the room and just tell me what you see. Doesn't even have to be a trade. Let me show you what I mean. Rick, if you take this picture right here and draw an arrow and do this, this is strong triggers. The scissors are open. They're all green. There's space between small and large. It's odds favorable momentum. Rule 1 met. That's not a trade, is it? Not at all. But what is it, guys? It's giving me the ability to say, this is my look. This is my best of the best. This is rule number 1. And every time I see that, now you're going to start thinking this, Rick. So whether you're taking trades or not, whether you're taking entries, you may say, triggers didn't break, that's a termination. Didn't have the best momentum, didn't take the trade, right? Whatever it is, Guys, the more pictures you take and the more you write on the charts, the more likely you are to get to where you want to be faster. So I don't have to see a trade. Just show me your chart reads as you're learning to read charts, guys. That's a great way for you to develop some confidence and move forward faster. I will be back in about 5 minutes. Stretch your legs. See you in a few. All right, y'all, we're going to get back into it. This is my favorite part. This is my favorite part of the day um, because it means that we get to see all the great stuff you guys are doing with the software. Miss Kathy says, you showed a couple days ago how to be sure the past trades show. Took a screenshot of that, but don't have any idea how to get there to fix the setting. Well, Miss Kathy, let's fix that. Right click on either chart and go to data series. So let's make a little how-to. Go to data series, and then from data series, you're going to scroll all the way to the very bottom, and you're going to look for this plot executions. And here it says don't plot. So you're going to want it to say text and marker. So from data series, you'll go down here, and I'll put that in the room for you. Little how-to. And I like it personally, and this is me just projecting, I like it on a small chart. So I like to go to my small chart and see my entries. I'll put text and marker because it shows me not only where I got in and where I got out, but it gives me the prices as well, which makes it pretty easy for me to do the math. I don't typically worry about them on my large chart because I may get into a trade and out of a trade, and I'm still in one bar here, and you just don't see it. But over here, you'll see little arrows and stuff. So like if I go, if I buy the market right here, it'll show me not only where I got in, it'll have a little blue arrow, it'll give me the price, and when I get out, it'll show me exactly the price that I get out, and it'll show me a little arrow where on the bar I got out. So thanks for asking that. Those are the little mechanic things that are great to understand because then you don't have to worry about them when you're looking for a trade. All right, guys, I'm going to scroll up to the very top, and we are going to look at some of the good stuff going on. Let's see. Paul, I think we got you first, right? This is from yesterday afternoon. Sometimes I'm here in the afternoon, and I'll look at your trades, and I'll comment in the room if I'm available. Otherwise, I'll come back and we'll catch them in the morning. So Paul, still using the 5-chart setup. Your biggest chart says that you have momentum and the potential to break. Your great big range chart said that you had momentum. Your chart over here said that you had momentum, not odds favorable, but still strong. And you just decide to jump in, pow, and you capitalize. You have momentum on every chart, and you say, I'm just going to jump in and make it. Name of the trade, paycheck. I like that, Paul. Second one is the exact same thing. Strong trending market, everything says up, you jump in, you get paid. So Paul, did you see the lesson that I made regarding what it really means to get past an area? Because on this trade, this is where I very often see people do this, where you're right at a key area, the triggers haven't broken, and what you're doing is you're really hoping that the area breaks. That's cool. I just want you to know that the higher advantage comes from taking price away from that area. So if you're trying to recreate Ron's trade, that's a very key concept of it, is letting the bottom of the bar clear the area. Let the back of the bar clear. And what it does is it assures that all of the price action is away from that point where they're most likely to make decisions. I just wanted to throw that in there. I love it. When you've got momentum on 4 charts, you let it get away from any trouble on the small chart. And I think that is kind of the, what's the word I'm looking for? The modification that I see a lot of people making. It depends on your plan. Are you trying to trade Ron's trade? Are you trying to trade that trade that Ron presents in the room that he created that so many people are trying to copy? If that is the case, then yes, the back of the bar has got to clear the area before you take the trade. That's if you're trying to be strict with the rules that he created. And there's my study on it. Yep, on the 13 too. So if we look at this particular picture, make it easier to see. So much information. If you were following that chili dog idea, Paul, Once the back of this bar clears, price is up here at about 68.15, which means that you're really not into the market until here. And it becomes about $100. You're looking to make about $110 because the only thing driving the trade and the whole reason for entry is momentum and path. And what you're doing when you allow the back of the bar to clear is you're assuring no price action is near anything that can create a bounce. Because what happens very often is, and it happened right here, price is still at the decision making point. This is a small chart example, and you can see the reaction, and you can see the reaction from here, and you can see the reaction from right here next to it. And even when it hits the fib here, we get a little tail. There is a reaction. So by letting the back of the bar, or the bottom of the bar, the top of the bar, depending on the direction of the trade, by letting price actually get away from the area that could create a bounce, it creates a little more of an advantage. That's all. And then it would be up to you to go back and study this a little bit, because you might say, when I've got greatness on 5 charts, I'm not going to wait for that. Good stuff, Paul. I'm a fan of this trade. I taught this trade to my wife. I taught this trade to one of my best friends. So I'm a huge fan. But when I was doing study, everything that I just shared with you right there about really letting it clear, awesome, was where I was taking a lot more losers, guys. I was taking a lot more losers than winners because I wasn't letting it clear the area. And that's what was getting me. All right, Wayne put about 6, 7 pictures in at once. I love that. Wayne said, Mark, I'm busy when I'm not here, and I'm taking trades, and I'm using playback, and I'm working on plans, and I'm focusing on execution, but I want the feedback. So I'm going to drop it in after hours, knowing that, guys, I'm going to come in and I'm going to look at it, and he can watch the YouTube if he's not present, or he can get the feedback the next morning. And what Wayne has here is a termination, reverses the market, but it's not odds favorable momentum yet, Wayne. And that is the one thing that I have to say about it, because the small triggers are above the large triggers. So we're getting close, but it's not quite there. But Wayne says, I get that, but the small chart shows change first, Mark. And when I have a strong top, when my large triggers reverse, my small triggers are turning. He goes, I want you to notice that from that termination, the other 2 charts that I rely on have odds favorable momentum. And Wayne, I love everything about this trade, because when a termination reverses the market, that's powerful. And while the large chart takes a little time to show change, your small chart showed all the change you needed to ride that small chart momentum, that range chart momentum, and take it right down to Fibonacci support. And this is an outstanding trade because you're coming from the termination. And there's your white bar right off the termination too, just to add warm fuzzies to it. Really nice. And that's one of those exceptions, right? It's not odds favorable momentum. That's okay. He has everything he needs to capitalize. But because I saw it, guys, I will address it. Jump the fudge in. Odds favorable momentum on 3 charts. How do you go wrong with that? Right? Odds favorable on 3 charts. And price is definitely at the decision-making point, right? Does everybody see that? He's trading directly into a termination condition. But again, and Paul, this goes back to your second chart. When the momentum is outstanding on all 3 charts, it's hard to stop the market. Wayne, I disagree. And feel free to give me clarity if I'm missing something. On your large chart, you are literally dissecting with price bars of magenta high as well as 1-to-1s. Every one of your triggers is trading below it. Every one of your triggers is trading below it. So it's not even a 50-50 yet. right? Look where your triggers are. We're not even saying it has the potential to break here yet, but the momentum is outstanding. If you were looking for the chili dog trade, it happens up here, but you're not. And I think this is what's important for people to realize is, Wayne, you are coming from a termination that reversed the market, that produced momentum on 1, 2, 3 charts. This is very much like Paul's entry. There's still a little bit of trouble here, and if you let the back of the bar clear it here, at least your small chart with all that momentum creates a pretty easy win. Does that make sense? So the large chart has the greatest momentum from the best spot ever, but you are trading into an area. You are trading into a termination condition. Your small chart lets you know that you're above that location price-wise, and I think your entry's great. I like the way you did it. I want to point out that this could create a bounce, right? You're above it here, but you get the confirmation of the clearing on the small chart, and it's a great look and it's a great read. Um, and this is letting the small chart show change, but momentum on all 3 charts. And guys, I realize sometimes I'll praise the hell out of your trades, and it sounds like I'm critiquing it down, but I'm not. I'm saying this doesn't match that, so let's talk about it, and let's talk about also why it was such a great trade and how you had so many advantages and how you are creating a plan that suits your needs because of the study you're putting in. Now, this is a true 50-50. I've got smalls above the large. There's your momentum. Potential to break. And it was a weak bottom. And no matter how many times they test it, it is a weak bottom. And you took the 50-50 trend trade and you get a nice entry, and then that second divergence kills the party. So one of the things when we talk about the 50-50 trades, and Wayne, I appreciate that you're going to sit through the lesson for the other people. On the KISS plan that I give you guys, there are, it's a different entry checklist. And the one thing that always starts it is from a strong bottom. Was it a termination that reversed the market? Was it a termination that created that reversal? It's more likely to go the other direction. And when the answer is no, it doesn't mean that the trade won't work, but it means that it's less likely to work. And then you'll remember that when we talk about areas breaking, we say that momentum is what we're looking for to break areas. And when I talk about divergence, I say divergence is actually a loss of momentum. And if you look at the KISS plan says don't let there be a divergence on the small chart because that's the first sign of change. And that sign of change lets you know that we're losing the potential to break. So when you couple it with a weak bottom and you throw in the divergence, we're really starting to give away our edge. The second divergence is very often the kiss of death on a 50-50 from a weak bottom. Not always, but more often than not. So absolutely, Wayne, I think there's a little management opportunity here, but coming from a strong bottom helps a lot. Well, I don't know. I think that can I go just loving grandmother on this one? I think the fact that you took this trade is amazing because there's a lesson in there, and what you're reminding yourself is that every now and then you might break a rule. But when you go back and study it, you're going to be more focused on this rule. I like the trade. I love the entry. I think that these are the quick profits and get to break even ASAFP. Nice job, Wayne. Odds favorable. You missed your chili dog. And you just jump in. Momentum on all 3 charts. I like it. And Wayne, I remember you telling me that these small swing 1-to-1s are problematic on gold, that they come into play. And this is where the back of that bar, having not cleared it, would have kept you out of that one. But then it just turns into the perfect trend trade. And you ride it all the way up. And I love this. It turns into another beauty of a trend trade. And you take it all the way up because of momentum and path. So the jump in Let it clear those lines, man. It creates such an advantage. Um, creates such an advantage. And you were telling me that these show in a gold. Um, and then it just turns into the beautiful trend trade. And it doesn't go where the market shouldn't go. Accepted risk. I love it. And what's cool is when it runs up, you tighten risk. You're like, all right, let's tighten. And then it pulls back right to the areas right it triggers. And you say, I'll just use that pivot for stop. And just even virtually no risk at that point. And then it gets to the fib. And you're break even going into the final stretch. And you get paid at trouble. And guys, this is a beautiful trade. Really nicely done, Wayne. I love the stop placement, where the market shouldn't go. And it works all the way up. All right, strong trending market. 30 plus bars in the same direction. Everything says down. Everything is going. There's nothing in the way. It's a strong trending market. You do take the short. So I think that the challenge on this one, Wayne, and let me know what you think about this. In a strong trending market, we're thinking, okay, sell the mid-band until it doesn't work, right? You never got to the area. You never got to an area for trade. You did have an HVA, but HVA's below here. That's a tough look. If you wait for the mid-band and then you do that on the way down, you're good. But you got in before we ever even got to a bouncy point, and you just got head faked. That was that small chart fluctuation. And sure enough, they get you up here. This is where I love that reversal bar, that confirmation, that establishing risk. Because when your trade is already coming from the wrong side of the triggers, when your trade is already coming where the entry advantage is gone, it's okay to change your entry approach a little bit. And then this one, I'm not sure which is which, but this short is fighting everything, right? This short is fighting momentum. This short is fighting direction. And it's somewhere up here fighting momentum again. So maybe the next one shows us that one. Or maybe we're just not going to talk about it. But, and the fact that you won it, I'm happy for you. That's a lot of sit through, fighting a lot of things to get that one. That's the next slide. It was the gap. Okay, so you let it hit resistance and caught it on the way down to get back to the large triggers. I got it. That makes way more sense. So Wayne, getting in with strong triggers, getting in with a close on the correct side, big difference in risk. There's a good lesson for you right there. Fighting odds favorable momentum on your range chart versus just getting in with a close below as they begin to slow down probably makes for a much easier trade. Great stuff. Guys, I'm going to tell you, it's going to be hard for you to not improve every day if you put this level of effort in. If you go through, if you trade, if you annotate, if you talk about what you saw, if you talk about what you did, if you talk about why you did it, where you did it, what got you in, what got you out, guys, you're going to be hard pressed to not move forward. There is certainly a correlation between the effort put into study and the results that that study produces. And I watch it with a lot of people over and over. So Wayne, thank you for that. Amazing. Strong trending market, and I love this. And Paul, I think you even mentioned this one. Pete says, look, I've got momentum. One of my lines is out, but it's not odds favorable because there's no separation. But that's a market that's screaming. Let me let the back of the bar clear the decision-making point, and I'll ride it up. Great job, Pete. And there's a great example of how once you get clear of it, the likelihood of success goes up. Love everything about it. Great recognition on the momentum. And then here we have that strong trending market. Every indicator says up, and Pete says, I'm just going to go up with it. and I'm going to make sure that there's nothing in the way, and you find a way to capitalize again. And then everything is still going up. And Pete says, in a strong trending market, everything is up. My path is clear. And buy the midband until it doesn't work. And Pete goes, well, I can't define risk like this. So I'm going to catch it on the way up and see if I can ride the strong trending market. And Pete, just awesome. I was looking at all y'all's trades this morning, just getting giddy. Odds favorable, potential to break, let the back of the bar clear, easy money. And then this one, Pete just got a little cocky. Pete, lesson for the room using this chart. If momentum is my only reason for entry, momentum is gone on this reversal bar, guys. That's it. And at this point, with this look, this is where I have to expect a potential trend trade. Does that make sense? With odds favorable momentum and a clear path, if my momentum goes away, my next logical choice is the trend trade because I have momentum and path. Well, there's no areas inside of triggers, right? My rules are not going to be met for a trend trade if it retraces up there. And then Pete, I know your exit is usually there, but that's a great lesson for the rest of the classroom. This is why we talk about naming our trades. If I'm in a momentum trade, I know that momentum is my reason, and a loss of momentum is a great reason to exit. And if I'm hoping my momentum trade turns into a trend trade, well, I have to make sure that my trend trade rules are met. Otherwise, an exit makes more sense. And this is pretty cool because it's just advantages. That's all it is. It's going back to that very basic core. But you've got to be able to do the calculations quickly. When you begin taking more trades, you have to be really in tune with your rules so that you can decide whether or not you need to hold, whether you need to jump, whether you need to manage, whether you need to let it run. So great job, Pete. Entered after a couple down bars, out at trouble, out with a loss of momentum. No areas inside of triggers, so Pete waits for confirmation and gets out of trouble. And I love it. Because there's no areas inside of triggers, it's okay to force the market to go in the direction of your trade. Pete knows that, and he does it very well. And then weakness, but clear path. No areas inside, and Pete doesn't take the trade. Pretty cool. Missing the advantage number 1, missing advantage number 3, 66% of the good stuff gone. Pete says, I'm not taking this trade, not going to do it. Nicely done. Great work, Pete. And for you new users, we've seen some trend trades, right? And we've seen a lot of variance on using momentum and path. We've seen a lot of opportunities being taken based really solely on momentum and path. That's why I push those two so stinking hard in the beginning. Because once you see that, you kind of see the world working around you a little bit. And it creates a lot of opportunity. So Cav says, check it out, guys. Strong bottom, odds favorable momentum. I haven't reached trouble. I take the perfect entry right at the mid band just above the trigger lines, and I exit at trouble. Beautiful. Great trade, Cav. Momentum and path. Odds favorable momentum. Potential to break, not a clear path. Working with the market is so much easier. It is, isn't it, Wayne? I think that we all, and Wayne, I don't know what your fight's been like compared to mine, but I believe that we all fight it a little bit in the beginning because we want to stay active. And we have this belief that if we're not constantly moving, we don't have the opportunity to make money. Guys, congratulations. You all have an awesome work ethic. And you all probably got to where you got in life by working hard, by staying active, by being busy. And trading almost demands the exact opposite. Cav, odds favorable, potential to break. This was your momentum trade. And then when you get in here, you are getting in on the wrong side of the triggers, right? And you're saying, I'm just going to jump in with all this momentum and the potential to break. I love it. And you said, if this one fails, well, I've got the perfect trend trade right here. I'm cool. I know where my stop goes, and you ride it all the way down. Um, and your exit is at 32. You exited on the low tick. Price pulled back to the 1-to-1. Stop 2 ticks above the red fib. I don't see a red fib. Oh, here, right here. Okay. Stop up here. How did you get that? Is that a predetermined target, Kev? You got out at the low tick. That's awesome. That feels good sometimes. That's nice when it works. I was like, how did he pick that exit? Predetermined target. Great job, Cav. Nice trading, man. This is that understanding. And guys, I'm taking these more advanced charts and really going back to basics. If this doesn't work, I've got a trend trade in the wings. I've got that awesome look waiting in the wings. And you get to the point to where you understand that. And you don't worry. You put your stop where the market shouldn't go. And when you don't have those rules met, you're inclined to not hold that trade. And you guys are doing it beautifully this morning. And there's a lot of great lessons that aren't going to make sense for you guys yet as a brand new user. But the more you focus on momentum and path, the easier these entries become, the more you're going to realize that these guys are just taking those very basic core advantages and turning them into trades. Paul. So the large chart doesn't have momentum, and it's going into 1, 2, 3 termination conditions. Your range chart has momentum, but it's trading into termination conditions. Your large chart here is trading directly into termination conditions, and your small chart sucked you in with a siren song. Hey, Paul, I know that none of your charts say your path is clear. Some of your charts don't even say you have momentum, but man, it's pretty. Triple dog dare you to take it, Paul. And Paul, you fell for it this time. Traded into terminations on every chart, and it didn't serve you well. That's okay. There's a great lesson in this one, right? There's an awesome lesson in this one. Man, Bob said, been there, done that. We've all been there, done that. Some of us still do it. I'm one of them. Every siren has a fool. Paul, I have crashed into those rocks with you 1,000 times. And you're just getting to the point. So, Paul, if this had been a strong bottom, right? If that market was coming from a termination that reversed it, you would have had more of a fighting chance. Does that make sense? This is weak. This market's more likely to go back down than smash through these areas. You don't have a strong bottom here. This market is more likely to stall out at the midband and fibs than it is to continue up. So a strong bottom might give you at least a fighting chance to trade into a termination condition. Great stuff. I appreciate the variety in the pictures, guys. I appreciate you guys taking trades. And I'm telling you right now, it takes courage to post a loser. It takes courage to stand up in front of a classroom and say, hey, I might have made a mistake. I didn't win this trade, but let's go over it so I don't make that mistake again. So bravo. All right, Todd. Why doesn't the blue fib show on the small chart? That is your small chart, brother. It's there. Why doesn't it show on the large chart? Todd, you may not be running your synthetics. Are you with me in the room? Let's fix it. Or let's try to fix it. Cool. So when you go to your large chart, do me a favor, right click and go to data series and make sure tick replay is clicked. If it is, this is what brings those synthetics over. This is what pulls the 5-1 areas, the 21-3 areas over and puts them on your large chart. If it is checked, but you still don't have them, try right-clicking and reloading the Ninja script. And it'll kind of go through those calculations again, and we'll see if it gets them on there like that. And then if that doesn't do it, okay, no worries. So let me know if that gets them on there. And then let's talk about your trade. And a lot of lessons that we've had today seem to be coming back into play here. Large chart's perfect, right? Large chart is amazing. Large chart is outstanding. Large chart is about as pretty as it could ever be with this look. And you take the I'm going to jump in trade. And Todd, you've been really good at this one, at the I'm going to jump in trade. But there was something that we talked about today. And this is your lesson, Todd, because I think this is the one that you need the way a lot of us needed it. If you trade into this divergence line, it's likely to create the bounce. If you trade into this divergence line, it's likely to create the bounce. And that's exactly what happened. You see the hits the line, creates a bounce. Hits the line, creates a bounce. Hits the line, creates a bounce. Pretty cool, right? So when you're just jumping into trades, it's all right to not trade into a line. And it's going to keep you from suffering the bounces more often than not. But let's go back to the brilliance of your hold. We like what we like, right? This line that creates a bounce, Todd, creates a trend trade. This line that creates a bounce creates a trend trade. This line that creates a bounce creates a trend trade. Why? Because this chart's perfect. So if you're going to jump into a line and your rules are met for the trend trade, well, then it makes sense to hold. If you're going to jump into a line and that bounce may put you where there's just nothing to save you, those are the ones that you've got to watch out for. Does that make sense? Your large chart was absolutely perfect, but this is avoidable retracements, right? Let it clear. And what you had here is this is a time where your jump in trade doesn't make as much sense as patiently waiting for the trend trade. It's okay. I was with you. It took me a second, but I got there. Does that make sense, everybody that loves to jump into the market? If you can't get a clear path on your small chart and your large chart is perfect, it's just, these are much easier trades with a lot less stress. If there's nothing in the way, take it to trouble, right? If you clear the area, take it to trouble. This is a great lesson for you guys that are trying to work through this. I'm just going to jump into the market scenario. Lines on both charts can create a bounce. So Todd, I hope that becomes helpful for you. I hope that is something that's going to move you forward at least one step. And I didn't tell Todd not to trade the market. I told Todd those can mess up your good time. But great hold down to the fib using the large chart advantages. Let me make sure I say that in there too. All right, Cav, triggers roll wide like a pair of scissors, so odds favorable momentum. And then, okay, talked about it. Why the difference between wide separation and no separation with large? Great question, Jared. Let me show you. And so let's not, and what I try to tell you guys is don't even worry about wide in the beginning. From the point of separation where the colors match, Jared, this is where I have the advantage of momentum. Does that make sense? When the space closes, that's where my advantage of momentum is gone. So here, it's super wide. Right here, it's not very wide at all, but it's still the same advantage of momentum. It's that separation. And what it means, Jared, is that your fast-moving average is screaming away from the slow-moving average. And that's just a momentum indicator. So from the point where the colors match, there's a little gap, there's a big gap, there's a huge gap, and then there's no gap. And there's opportunities all the way down. So don't get hung up. And let me see if I can find. So when I talk about scissors open, let me go back to the internet here. Let's see if we can find a picture real quick. SCI, scissors just barely open. And this is why I say let it be black and white. Let it be very black and white. because these scissors are open, and these scissors are open, and these scissors are open, right? And every one of these would qualify as strong triggers. These scissors are closed. The small triggers have returned back. There is no momentum. And that's why I say let it be really, really black and white as a brand new user. They're either open or they're closed. It's either momentum or it's not. Does that make sense? That's a great question. That is a great question. So if we look at the live market, there's my point of separation. The strength is there. And once it comes back and closes, I'm obligated to say the advantage that comes from rule number 1 is no longer in play. It doesn't mean that there's not an opportunity as you grow with the software, but we can identify the best of the best through the separation. Awesome, awesome question. Thank you for that, Jared. Very often the questions that you guys ask in the room are the questions that 20 other people are wondering. So I love it when you do that. Cav trying to throw me off by not posting a link. Oh, hold it. Cav, we didn't go over your last one. My apologies. I got sidetracked, and I do that sometimes. Don't let me get away with it. All right, Garrett, this one upset you last time. Should. It may. So let's look at whoops, wrong drawing tool. This is where they closed. That's what it did after they closed. I'll get it back. It still went up, right? So it went up. It just went up without the advantage of strong triggers. Guys, these indicators and the way we read them is designed to give you the highest chance of success. There's a lot of opportunities outside. A lot of opportunities outside. And Cav, I apologize for that. I did. I had you up, and then I saw something shiny, and it completely distracted me. My apologies for that. Strong triggers, right? Strong triggers. Open like a pair of scissors. Look at that momentum. I love it. Cav fails to mention path because he knows that he's trading into a term. Is that fair, Cav? Usually you love to tell me that it's 50-50 or that it's a clear path, but you're trading directly into a termination condition here. And for Cav, it's okay. Cav's been doing this a long time. Cav knows what he's getting into. If you're a brand new user, I encourage you, don't leave out the rules that you're breaking. It doesn't mean that that's not a trade. But if Cav has said trading directly into a termination condition, Cav, because of his experience, he knows I may have to manage assertively. If something goes wrong from my entry, I may have to get out, whether it's a divergence or whatever. And Cav also gets paid right at the same thing that could create trouble. So I did this a lot. I did this to the point of just not even taking the picture on a loser or if I was breaking a rule, because when I got called out on it, and called out seems like an aggressive way to say it, but when it's pointed out to me, I would get in my feels. Oh man, but it worked, but I made money. But the reality is this takes money more often than it gives it, as evidenced by the 1, 2, 3, 4 times termination conditions held before his trade. Cav said, with this level of momentum coming from a strong top, I'm willing to take a shot, trading back to that termination condition, hoping the market retests. And Cav, you did it beautifully. But we love to not mention when we break a rule. It's okay. You just knew that you had to manage. So great job, Cav. And thank you for posting that. And guys, you really do. You give me lessons to teach the newer people, you experienced people. When I see you take your chart reading and it becomes second nature, it doesn't always make the annotations. I know that it doesn't. Cav doesn't need to annotate his charts. Cav knows why he's doing this. Cav's doing that for all of you guys because he knows that this is an education room, and I appreciate that. These old timers, Cav, you're an old timer. These old timers, they're happy to share knowledge. That's one of the reasons this classroom is so amazing. All right, there's your termination. There's your strong triggers. And this is pretty cool. Cav lets it get below trouble. There's his entry. Didn't give yourself much room to make money though, Cav. That's a pretty short run to get to that fib. And Cav says, I know what it looks like when momentum goes away. I'll take it with strong triggers on both charts. And the second I start to see change, I'm going to exit. And you capitalize. Great job. Wonderful work. All right, I'm going to ask a question. You guys don't have to answer it out loud. Do you see other people making money and feel left out? I did as a brand new user. I watched other people make money and I felt left out. Like, how come I'm not making money? How come I don't see it like this? How come they're making money and I'm not making money? And guys, this was a big, big burden of mine when I started with the software because I wanted to make money. I didn't want to learn how to make money. And when I saw people posting in the room and posting winners, it made me not want to post. Well, I had a loser. Guys, once I started posting my losers, what I was able to do is I was able to learn why they were losing, and then I was getting the coaching that I needed to correct it. All right. Victor, are you in here with me? Jared, and it's normal. And that's what, guys, there's a reason that I share my own personal story because I was the biggest frustrated, in my feels, agitated, F this software guy ever after the first month. Because, and here's the true story. Um, the true story is I didn't do the work to learn how to read the indicators. I didn't take pictures. I didn't participate in class. I didn't annotate charts. I didn't use a spreadsheet. I felt entitled to win. I felt entitled to make money because I was putting the money up for the software. Um, Off your butt, boy. He was talking to me, Jared. He was talking to me. He's talking to me 5 years ago. Mark, get off your butt and do the work so that this can become easy. So Victor, again, I'm going to go through. I'm going to smash your toes, Rick. You already own the software. You can't leave me. Just kidding. Up or to Paul. Right on. So Victor, I'm going to go through the very basics, the very foundation, and you're going to love this. So first, I ask myself, what color is the background? And the one thing, at the time of your trade, your background is green. It just turned green, which means you can say, I'll look for a reason to go long. And Victor, let me know if you're with me on all of this. Looking for a reason to go long. And then I'll say, do I have strong triggers? So Victor, if you were annotating this chart using my fingers and I asked you, hey, at the time of this particular trade, were your small triggers above your large triggers? Were your large triggers wide? Was there space between the two? And I feel like that's your strong trigger look, but we're not quite there. So I have to say, no, not quite. They are green, but the smalls are on the wrong side. And that's cool. It's okay to not have it. And then I have to say, do I have a clear path? And I have to say no. All my triggers are below the fibs. Only have a few. Just enough to keep you balanced. So Victor, what I'm doing right now is I'm taking this chart and I'm going back to the very core. I'm going back to the very core lessons, momentum and path. And this large chart is void of momentum and path. And that doesn't mean that there isn't opportunities in there, but I want you to really focus on these, because when you can identify these two things, trades become easier. They really, really do. Because what happens is here you're trading into trouble, and you get this patience piece that comes at it, that you can start to trade a pattern, because what happens is eventually you do get momentum and that market is going up and that path is clearing, and man, we're going to start looking for a much higher probability trade, for a much higher chance of success coming from over in this range here. Does that make sense, Victor? So that's the very basic remedial approach. But here, I like to celebrate victories, especially when you guys are starting to see things. And Victor, you noticed that they tried to push down, I'm assuming, and then they pushed up. And then when they tried to push down again, they failed miserably and everything started to go up. Did you see that? Did you recognize that the sellers tried and the buyers keep telling them to go to heck, and here's your losses of momentum? And it looks like the tides are changing. So now I'm going to back off remedial, Victor, and we're going to celebrate some awesome chart reading that you have going on here. That was your reason. I love it. I didn't know that, right? Because you didn't annotate anything. I'd love it if you would tell me why you do what you do. So once everything starts going up, the sellers have failed, you see the divergence, and you're like, man, it's green, it's green, it's green, everything is green. There's the exact same look, Victor, that we had on that short that we talked about from 5:15 in the morning. Let everything roll, let everything go in the direction of what is being shown. And then what happens is you start to find much easier trades. I love your reasoning. I support your reasoning 100%. And you'll find, Victor, that if you just write why, and trust me, there's people that do it extensively, and there's people that think I am a colossal pain in their ass for asking them to do it. If you take the time to write why on your charts, guys, you're making it repeatable. You're making finding success repeatable. You're making repeating high probability entries repeatable. You're making management repeatable, because all your annotations do is they describe your recipe for the trade that you want to take, for the trade that you're studying, for the trade that you're taking, that you can prove wins more than it loses. Does that make sense, Victor? So I know that if you're brand new, you're like, ugh, Mark keeps telling me to write shit that I don't even know what to write. Pardon my French. Let me show you how I would have annotated this chart as a brand new user, Victor. I would have written every indicator was green and I went long here. And literally that would have been my entire annotation, but my entry probably would have been about right here. And what this does is it opens the door for conversation. It opens the door for coaching. Because if you tell me this is what you did, we celebrate the momentum and we celebrate the direction. We celebrate the indicators matching. And then I say, hey, check it out. With just a little bit of patience, we can reduce risk. And with just a little bit of patience, we can take a high probability pattern. And you're going to say to yourself, the market's likely to go all the way to trouble up here. And we can avoid a lot of the headaches and bounces with just a little bit of patience. And that's what the room's designed to do. So you get rock star status for posting in the room. I know it's difficult. And now we're going to take it one step closer to getting you right where you want to be. I love your reasoning on the trade, though. Good stuff, Victor. Thank you for sharing that. And then Miss Jen and Pete and Joel. And I remember this trade because you all showed me the exact same thing. Past habits, no worries. Do you know, Victor, one of the girls that I dated before I married my wife actually hit me with her truck. I'm sure I said something wrong. But my job is to not be put out with my current wife for what my ex did, right? So it takes a while. The new one pays for the sins of the old one for a little bit, and then it all gets better. So you're okay. Work those past habits because your pattern recognition is awesome. And you may just find a way to incorporate what we do to make what you know even more effective. But you wouldn't be here if it were totally effective. So the first one, Miss Jen, few ticks from the term, odds favorable momentum, potential to break, perfect entry, quick profits, out at trouble. I don't know that I can say anything other than this than high five. Odds favorable, potential to break, and this is kind of funny. They mentioned the potential to break. Perfect entry, held it, great place to take profits, and then when divergence prints, you take it. And then just one more for grins. Odds favorable, potential to break, sniper entry, right? Perfect profits. Jen, Pete, I think it was Pete. Was that Pete? It was either Pete or Cav. 3 people, 2 different markets, 32 flavors of goodness, guys. Everything that we teach in the first hour executed flawlessly by 3 different people. I love it. That was Jen, Pete, and Joel. I want to make sure credit's given where credit is due. And Wayne says, you know what? This is fun. I love this. Wayne, you annotate charts the way I think, and I think that's why I appreciate your charts so much. This is fun. Everything's screaming in the same direction. And when the market can't make a decision, there's just nothing to do. And Wayne posted, this is my sit on my hands look. And look at this, rule 2, 2, 2, 2, 2, 2, 2. Just defining a range, and Wayne's waiting for it to break out. Great job. You guys know you can take pictures when your rules aren't met, and it costs less than taking a trade and losing it. All right, Cav, switching to Sim, gold met. Odds favorable, potential to break. There was your perfect entry. And you get in on the way up and you capitalize just easy peasy, lemon squeezy. Momentum, potential to break. Let's go up with it. Great job, Cav. Wayne said, ugh, I know better. Know better, horizontal triggers. And this is boredom. And again, guys, I'm going to celebrate the fact. I'm going to celebrate the fact that you guys are willing to post losers, especially when you know you made a mistake, or when you fought something, or when it just wasn't right. And this is a byproduct of being bored. And what's interesting, and I've done this too, is at 10:05, Wayne said, this is garbage, I'm not trading it. And by 10:17, he was sick of waiting. I've done it. I have told my brother there is no way in hell I'm trading this market. It's going sideways. And 2 minutes later, I was like, I should have listened to me because I just got run over. Guys, this is normal. This happens. The longer the market makes you wait, the more inclined you are to break your rules. The more you trust your rules, the easier it becomes to sit still when they're not met. And then Paul, Mark, the pressure on me being a Novak would have been immense, if not greater. And Paul, you're absolutely right. That's one of the biggest reasons I didn't participate in the room when I first started learning the software is because my last name is Novak. And guys, I had to learn grace on this one. I put so much pressure on myself to be competent with the software inside of a week because my name was Novak. And what would you guys in the room think if someone named Novak couldn't trade, right? And what would you guys think if I made a mistake? And what would you guys think if I took the wrong entry or traded into a termination? And there becomes this moment where respectfully, guys, I don't give a crap about what you think in terms of my trading because my trading is mine. I have to focus on my path And if you guys don't like my trade, it's okay. If it fits my plan, I'm still going to take it. Bob just posted this one. Bob, I got to beat you up 32 ways to Sunday now. Are you in here? Not really. This is going to be pretty painless, but you're going to like this. Sometimes you guys will annotate a chart and you'll make a mistake with your annotation. Sometimes the mistake is, oh, I had a clear path when you didn't. Sometimes the mistake is, ooh, I had momentum when you didn't, right? And that mistake creates a challenge for you that you didn't recognize in the moment. Sometimes your mistake is that you're better at stuff than you realize. And Bob, this is one of those instances. So I'm going to give the definition for a strong top or bottom. And a strong top or bottom is a termination condition. And that means no triggers through the area. Oops. That reverses the market, and we'll do this on the large chart because that's where it happens. And Bob says, man, I've got a weak bottom, Mark. And I'm like, Bob, do squats. But there's a termination that the triggers didn't break through. There's a termination that the triggers didn't break through. There's your little reversal area, although they could barely go down, Bob. This is a strong bottom. This is a termination that reversed the market, that gave you the perfect look, and just an absolutely amazing entry. And if you were following the KISS plan, ladies and gentlemen, and you said to yourself, the only way that I'll take one of these 50-50 trades, the only way I'll take a trade when it has potential to break is from a strong bottom, well then, Bob, you would have missed this trade, right? You took the trade because it was perfect. And I don't think weak bottom played into it at all. But if you're one of those people that you have to have a strong top or bottom to take the trade you're looking for, well, what happened is you just got lifted up onto a pedestal. You had your strong bottom. And here's the definition so that you don't make the mistake again, because that may be imperative to your trading plan. Does that make sense, Bob? It was an awesome strong bottom. Whoops. And that's why. And guys, all critiques aren't negative. Sometimes it just, you're throwing one more advantage, one more arrow in the quiver. Great trade. Odds favorable, potential to break. Guys, look at the entry. Can we talk about management plans real quick? Bob's in at 32. The market shouldn't go to about 24. 7 ticks of risk. When Bob gets a reversal bar in the direction of the trade, his new stop is like 28. He's got 40 bucks of risk on this trade. This is why great entries create manageable trades. Bob, beautiful, beautiful job. And thank you for the opportunity for the lesson on strong tops or bottoms. All right, Miss Trina, here we go. 1, 2, 3, 4, 5. 5. If you would have stopped at 4, we could have got our booty on the dance floor, Trina, but alas, it was 5. Let's see what you did. Let's read what you did. So Miss Trina says, Mark, check it out. This is a strong bottom. This is a termination that reverses the market, and I know that the decisions made at this key Fibonacci area were so impactful that it gave me my rules met. Strong triggers here, but there's a termination. Strong triggers here, and I love this recognition. Trina, it was close to the divergence high, and you said, yeah, but my rules say price reaches an area, and it didn't. And you take the perfect pullback, you get in a little late, entries at the area inside of triggers. Does that make sense? And you said entry at reversal. There, you can't say that, Trina. Respectfully, you had no idea this bar was going to go up. You didn't enter at the reversal. You entered on the, oh shit, I missed my mid band. I'm going to get into this trade because I'm still in the retracement zone, which means that you have an amazing understanding of where the market may retrace. And that means that you know wholeheartedly that odds favorable and a clear path creates a huge advantage to the upside. And while the entry is late, it's still a very valid entry. You get paid quickly. Does that make sense? And then it pulls right back to the mid band, 1-to-1s, and it continues up, and it's a beautiful hold. That's your cheap date entry. And the only reason that I mention it is because if they decided to go from the area where they go from more often, Trina, you miss the trade, right? If you try that entry here, you miss the trade. And that's why I bring it in. And Wayne, it's easy to say only $60 risk. What I see is I just missed $300 worth of potential money because I tried to save a few pennies. With this look, I'm not shortchanging. I'm in at the area, and I don't care. You can't stop me. And it's easy to say after the fact, yeah, but look how great it looks. But what does the market do more often than it doesn't? More often than it doesn't, it goes from the area inside of triggers, the same way it did right here off the 1-to-1s. And once this trade got going, it's still 60. I know you would have been at mid-band on the way up, right? But it's, I guess the point I was making is that Trina, great job understanding where the market should go and where it shouldn't go or may go. I don't even want to say should. If this is going to be one of those winners, the market should not go beyond those triggers. You knew that, and you were still willing to take the entry. I think that's awesome. So that's really a positive. I just have to go back to the rules because we're teaching here, right? All right. Strong triggers, no through. I like it. Odds favorable, dig it. Clear path, whoo. Guess you were focused on the mid band. Yes, ma'am. Traded directly into a termination condition. And there you go. You missed the pullback, got in on the reversal, and you still got stopped out because that big blue fib. I like this. Have you guys ever been so hyper-focused on something that you didn't notice that your small chart printed divergence on your 50-50? Or you got so focused on your entry that you didn't even recognize that a fib showed up on the other chart? I've done it a million times. But what a great reminder, right? Trading into a termination condition reduces the likelihood of success. Great job, Trina. Not going to get mad at you for mistakes. We're going to celebrate them. Oh, see, there it is. Everything says up. Life is beautiful. And you take the entry. And you get paid. And then, Trina, my question would be, nothing. You keep saying entry at reversal. I disagree with that. A reversal bar is an entire bar. You're entering at the area inside of triggers, hoping that it becomes a reversal bar, right? You're letting after the fact shenanigans convince you that you're getting at a reversal. You're not. You have a 50-50. It's coming a tick above support, and you're taking the perfect entry. And then, Trina, my question would be, with that big, beautiful pink line that could stop the market, why not just get paid at it instead of giving everything back on the second contract? So beautiful trade, awesome entry, great execution. I believe your management could use a little fine tuning there. So I might, if this were my chart, I might take the time to type it out. So I create that correlation in my brain and what happened. It's okay to get paid at trouble. That could stop the market. And I'm typing and spelling horribly. There will be another trade. And this is a new user thing. We are so hopeful that it will run forever that we'll give it all back, hoping it runs forever, right? And it's since it's not high probability yet, Trina, one divergence creates problems. Two divergences on a 50-50 typically kills the party. Awesome entry. Great execution on profits. 2 ticks above the area inside of triggers. That doesn't change. 2 ticks above the area inside of triggers. Right where you got in, Trina. 100% where you got in. If I missed it, oh, you're going to hate this. If I miss my entry and my rules are not met, it's not my money. It's not my money. Too many O's. Trina, I am so hell-bent adamant that this is my trade that that's where I take it from. Because if I miss it, right, if I wait for a reversal bar to 22.50, I don't have room to make money. I don't have any room to manage a trade directly into a line. So if I don't catch it at the best spot, it's just not my money. I'll wait for the next one. Now, let's create a different scenario, Trina. Let's say, hypothetically, that this big pink line wasn't there, that you had acres of running room to get to the next trouble spot, and you decide to jump in late, well, then you've got time to manage it. Then you've got time before you hit something that creates a bounce, and it creates a very different scenario. On this trade, missing the entry doesn't give me room to make money. Does that make sense? I don't want to say that there aren't times, where it'll happen, but make sure you have room to profits if you're taking those later entries. Claire, click settings down here, go to more settings, and under trading, executions, execution labels, and that comes from your settings right there. That'll let you see them, and it'll give you the option to put them on both charts. Quick little tech help there. All right, Miss Trina. Odds favorable, potential to break, strong bottom. It didn't get you at the mid-band, so you catch it on the way up. 2 divergences on a 50-50. Oh, Trina, you showed me your butt. Nobody's done this in a while. My rules aren't met, but how often does that result in success? My rules aren't met, but. So you said, I know divergence can kill a 50-50. I know 2 divergences, or even worse, but I'm going to hold anyway and turn this into a loser. And it goes back. Sometimes just not your money, Trina. Sometimes you see everything, you're like, oh, I can't wait. And you have to switch gears and say, dang it, they took away my advantage. And it's not a clear path. It's the potential to break the divergence high. Do you see that? So how you annotated it changes the dynamic of the management drastically. If it is a clear path, well, and it may have been because you believed you have a clear path, right? So if I have a clear path, 2 divergences doesn't scare me. If I have a clear path, that's my entry. But if it's only the potential to break, that's what kills it more often than it doesn't. And again, Trina, and thank you for these great lessons. If it were a clear path, this is a high probability trend trade, right? And it has its own management, has its high probability trend trade management. Because it's not a clear path, it's a 50-50. Different entry and management rules. And that's okay. And that's why the chart read on the large chart helps define what kind of trade you're taking. So I love this because if it were truly odds favorable and clear path, you managed it beautifully. Because it wasn't, because it may have been a misread, you needed to change your thought process on management. Does that make sense? That's a good lesson for all of us, I think. And one of the reasons why it's a great habit to name the trade that you're in, to name it. This is the trade that I'm in. Now I know what it takes to enter and I know what it takes to manage. Weak top, odds favorable, clear path, agree 100%, perfect entry, awesome, awesome, perfect re-entry, awesome, awesome. Miss Trina, there is nothing better than having to take a couple lessons and then ending on a high note, right? Odds favorable, clear path, perfect read. And Trina says, check it out. Rockstar entry, get paid twice. Party's not over. Rockstar entry, get paid twice. I mean, come on. That's pretty. What a great way to end that series. Did you do that on purpose? I love it. I love it. I really do get excited about watching you guys grow. It's pretty awesome. Miss Kathy posting. Let's see what you did, Miss Kathy. Momentum? Yep. Path? Yep. Where it should not go. All right. I like this one. So we're going to talk about this one. Miss Kathy, are you in here? Is she smiling big? I love that. Thanks for telling on her. So odds favorable, clear path. That's your first entry, Miss Kathy. That is the pullback to the area inside of the retracement zone. Can you give me a Y if you see that, if you know that that fits the rules? Awesome. Your window of opportunity came all the way down to those yellow 1-to-1s. So you've got potential entries on this look. This is your first one. This is the one that the rules say is your best entry. There's your second entry, still at an area inside of favorable large triggers. Does that make sense? And then where the market should not go, whoa, that's way too big. Hold on. Should not go 4 to 5 ticks below the large triggers. So what I do want to do is I want to adjust your thought process here. Where the market should not go isn't that line, but rather it's a little further down here, beyond the retracement zone, beyond the areas inside. Does that make sense? And I know you're saying, but it's below the areas inside of triggers. But we give it a little breathing room because as good as we are, sometimes there's a little nonsense that happens. So now you're waiting. Didn't catch this one. Totally cool. The rules are still met on the large chart. You've created your window of opportunity. Perfect. And now the rules say, let's look for an entry 2 ticks above the highest point of support. And we do that because very often with this much momentum, they very often struggle to get below that highest point. You're 2 ticks below it, but still in the window of opportunity, still above where the market should not go. And while you run the risk of it tagging that midband and running without you, this is a valid entry. How did it turn out? Do you have a picture of the end result? Because I love it. Your entry logic is beautiful. Plus 200. That's what I'm talking about, Miss Kathy. Wonderful job. Look at the way you identified it. I love that. I love to see that you went through the process of saying, this is the window where it's most likely to bounce. This is where my advantage is still in place, and this is where my advantage is gone. And it's all dependent on this chart. So virtual high five coming through the internet at you. And thanks for posting. That was pretty painless, right? Guys, I love I love giving feedback. All right, Paul. Lots of odds favorable momentum. Warning on number 2 was a 13 range, small triggers above the large triggers. So everything says up with ferocity. Everything says up with anger. Everything says up with a nasty disposition. And you go short. And it doesn't work. There may be a lesson here, Paul. When every indicator on every chart says up, there's that darn siren again. But it's still into a fib with all the triggers above it. So again, guys, I don't give trading advice. I refuse to give trading advice. It's not my job. I'm not allowed to. I have no desire to. I'm going to write myself a note real quick. And this is just a note for me. When every indicator on every chart says up, except my small chart, I'm not going to get suckered into a short again. This is my lesson for me today because I don't want to fight the trend. I don't want to fight the triggers, guys. I don't want to fight momentum. And I don't want to fight the large crowd. And dag nabbit, carnsarn it, that small crowd loves to talk me into nonsense. Guys, they're going to get you to smoke. Try marijuana. Talk back to your parents. Skip class. It's bad news over here. Go with the good kids. Thanks for posting, Paul. Does that make sense? Wayne said it earlier. It's so much easier when you don't fight. I think Wayne said that. John Novak's bestseller. You're of the opinion that you can properly judge reversals and breakouts? I'm of the opinion that you're struggling with your opinion. Everything says up. You know what John used to do to me, Paul? And it's kind of funny, and he used to aggravate me, is he would circle my large chart, and he would put it in front of me, and he would just ask me, Mark, is this your best look for a short? And it was such a simple concept. Mark, is this your best look for a short? And the answer is obvious, right? It clearly wasn't obvious to me when I did it. Something in my head said, go short. And instead of saying, dang it, Mark, blah, 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 he would take this picture and he would ask me that question. And I'm telling you, it really did pay dividends because what I did, and as I always have a notebook in front of me or a sketch pad or something. And what I started doing is I started writing down on a big piece of paper and a Sharpie in front of me, is this my best look? So when I looked up to my chart to see if it was my best look, and it looked like that, then I was quicker to answer the question no, Paul. So that was one of the things that helped me work through it. That was one of the things that helped me work through it. Odds favorable, clear path, pulls back, doesn't quite make it, and just rides it. Beautiful, Cav. Momentum and path, momentum and path, momentum and path. GT, good top, strong top, triggers down, they're wide. You get in at 940, so you are trading below the fibs with the potential to break. Actually, you're in over here below the fibs after it retraces. You tried the long, so Cav did this for you, Paul. When these are screaming down, the long rarely works. He says he reached target, but man, shenanigans. And I don't know why you did that, but you did it. And then you just jump in and go with everything and it becomes effortless. Small term victories. Fighting everything and getting lucky. Small term victories. Sim trading, yeah, but your brain doesn't know that. Guys, the stuff you do on sim will show up in your live trading. The habits you create in sim will show up in your live trading. I say that with the utmost confidence. These dash zones, Miss Claire, these are where there were gaps that were filled. Um, so there was a gap in price somewhere back here. This represents them trying to get back and fill that gap. That's my understanding of it. So when you see these very often, do you guys remember, and I haven't seen it, you don't see it on Rinko. Do you remember gap open, gap closes? Where the market closes at 5, but it opens at 15. Claire, are you familiar with that concept? The gap open or the gap close? You don't see it with Rinko bars. But you'll see at midnight, a market closes trading at 100, but it opens trading at 150. This shows you that gap, Claire. That's all it is. And a lot of the times they try to go back and clear and close that gap. So the dashed lines identify it. Muser, strong bottom, odds favorable, divergence in the way but not concerned. Entered at the mid-band inside of triggers, stopped out where the market shouldn't go with very little risk. Is this trigger change at pullback something I should have given more credence on this trade, or just another 20 to 30%er? So Muser, I'm going to give you two answers, brother. The first answer is that 70 to 80% winners. Don't ever apologize for mistakes, please, Jared. 70 to 80% winners. And when I talk about that potential, that's for a high probability trend trade. Guys, just because you say you're not concerned with it doesn't mean that it doesn't show up, doesn't mean that it doesn't play a factor. Muser, you didn't have a high probability trend trade. You had a 50-50 trade. You had a market with the potential to break that area because of the momentum. And by the time this happened, Muser, you were already stopped out. Does that make sense? So it's not a part of the 20 to 30%er because it's not one of the trades that produces typically 20 to 30%. So Muser, what happened is this divergence would have been your heads up. This loss of momentum on the small chart would have been your heads up that this area has a less likely chance because that's a loss of momentum and we rely on the momentum to break the area. And then your second loss pushes you even lower. And then finally from support with every trigger line up, that's where it finally goes. But it's the divergences on the small chart. That's your heads up that it may dance, that it may push, that it may not be the perfect entry. Does that make sense? It's a great look, man. It's a great look. Divergence is one of the biggest killers on 50-50s. You had your strong bottom. Sometimes people will say, I'll take it with a reversal bar, but even that second lower divergence would have been an exit condition. And then if you really wanted this trade, Muser, do you remember when we talk about the continuation entry? When we talk about it pushes a little bit below the good stuff and maybe it hits a stop and it takes you out, but then the small triggers roll up and the large chart is still rock star, that's your second chance at the trade that didn't make it. Good stuff, man. John said the other day, it's the subtleties that are what take the time. The basic patterns are pretty easy. It's the subtleties that take a little time and a little experience and a little repetition to understand. All right, this was Wayne, right? This is Wayne. Wayne says, check it out. Chili dog, odds favorable, 50-50. So Wayne, not quite a chili dog. It's a jump-in trade because the back of the bar didn't clear trouble. And this is just me nitpicking about. This is just me nitpicking about the rules. So Trina, you tell him the bars have to clear an area. I'm counting on you. Say it's not a chili dog. You just jump the fudge in with momentum on every chart. But you did let it clear on the small chart, which is awesome. So after you beat him down, I want you to lift him up. He didn't let it clear here, but he forced it to clear here. and then he rides the momentum down. And then if you're gonna hold a momentum trade, it should still have momentum. So maybe he'll watch the video. And guys, if you're gonna try to hold it, it's not either 7 ticks above a mid band to cover a pullback. That is malarkey. Because the market shouldn't go 4 to 5 ticks beyond these triggers. Your mid band is 4 to 5 ticks beyond that triggers. You have zero way of gauging that mid band may hold. If you're hoping it goes down, trend trade rules aren't met. I love the trade. And Wayne, one of the things you're doing well, and Paul, this is kind of what we talked about. When this market is strong coming from a long top, you're not letting it clear on the large chart, but you are forcing it to clear on the small chart, and it's really paying dividends for you. Nice job. Nice job. I love it when you guys have me running over. Love it when you guys have me running over. This is great. We're going to talk till 2 today. Weak top, dig it. Odds favorable, absolutely. No path. Let me see where you got in. 44.75. 44.75. So yeah, you're trading directly into 1-to-1s, directly into Fibonacci. You made the choice to do it. Text and markers don't show on large, even though that's checked. Not sure why. Todd, is it checked on this one? Did you check it on the large chart as well? You do have to activate it on both charts. You just jump in with all that momentum and you get paid quick. And you're like, wait a minute, this is higher probability from the other side of the line. And then you jump in here and you say, now life is good. I'll run that bad boy down to the fib. And if this fails, it turns into the perfect trend trade. I like what you did, Todd. It looks right here. Yeah, you like, whoops. And then you let it clear. Nice job. It is checked on both charts. You could try reloading historical data. You could try rerunning the Ninja script, see if that helps. If not, you could build a new chart. Have you just tried building a new chart? Build a new 13.2 and see if it shows up. That would be the next thing to go for. I don't know why it's not showing up. That's kind of weird. But great job. I love it. Letting it clear. Maybe 2 bars more. Let the back of the bar, let the price bar get totally away from the decision-making zone. It'll increase the likelihood just a little bit. Nicely done, though, man. Really good trade. And sticky fingers happen. Way to not hold and hope. Oh, that's true, too. Is that what happened, Jen? So if you're not in the same market or in the same account on both charts, it won't show up. So like, yeah, if you're executing Apex over here, but you don't have Apex lined up over here, you won't see your entries on this chart. So make sure that the accounts are the same. Thank you, Jen. Didn't even occur to me to say that. You get the microphone tomorrow. All right, Paul. Not ready for shorts. Directly into termination conditions. The difference on this one, Paul, this chart is coming from a termination. This chart has odds favorable and the potential to break, and you do take the entry, and then the area with the potential to break didn't, and your management's nice. Your management is nice. It's not wanting, what's not wanting to? Oh, not wanting to hope. Sorry, it takes me a second sometimes. So Paul, potential was there. You get in on the way down and you manage aggressively because it's not a clear path. Not much room. Just because there's not much room doesn't mean some of you guys won't trade. It just means you have to manage it more assertively. Nicely done, Paul. And you're trading with direction, trading with momentum. Makes it easier to manage. Bottom discussion. Is this considered a good at the fib even though it had a ton of momentum into it? Absolutely. 100%. Paul, are you in here? I'm sorry, other Paul. Pinieski. Actually, it's Pinieski. Other Paul that posted the question. Okay, cool. Termination conditions are separate from momentum, right? We say, man, having momentum is awesome. Having momentum in a clear path is even awesomer. And the reason that we never discuss the momentum involved with a termination condition is because what you're going to find is there are a lot of times where the market screams into a termination condition and it stops. Notice that it doesn't reverse, and this is such a good example. Whoops, where did it go? Do you guys see how it gets there, the potential was there, it doesn't break, and it pushes all the way back to the mid band, and your large triggers don't change, Paul, at all. They stay up, it closes the gap to the large triggers, and the market continues up. And the reason that I mention that is because the definition for a strong top or bottom is that first it reaches that termination condition, and then it reverses the market. And you've got beautiful pictures of it here. First, there's your termination, right? There's your pivot stop out. By the time it can reverse the market, it's termination city. There's your termination condition, never reverses the market, not a strong bottom. There's your termination condition first. This is where it reverses the market. That's what sets you up to get paid on that 50-50 trade. Does that make sense, Paul? Does that answer your question? Once you have momentum, it's there. Termination conditions have nothing to do with it. It was a great bottom. So, Paul, one of the things that I think is huge for people, and maybe we forget to do it a little later in life, is there's very specific language. A strong top or bottom is a termination condition. Whoops, let me back that up. There we go. A strong top or bottom is a termination condition that reverses the market on the large chart. And the language is 100% consistent to define it. So asking about the bottom, because it'll change the way you feel about the 50-50. Absolutely. Perfect. Guys, these are the great questions that you just got to ask every now and then. And Paul, you're absolutely right. That strong bottom increases the likelihood of success on this 50-50. This strong top increases the likelihood of success on these 50-50s. Great stuff, man. Great question. Thank you for that. Let me figure out where I was. Whoops, I overran. So many great lessons. You guys are killing it with your posts and asking and pointing out and showing. And I like it. Oh, hey, appreciate it, Cav. Have a good one. Isn't it awesome when there's so much participation? We all get smarter because every question one person asks, 20 people are wondering. All right, Miss Jen. Term, smalls just through, large nowhere. It's a potential to break to the downside, right, Jen? Okay, and then it fails. And now you have odds favorable, and you have a clear path, and you know exactly where the market is most likely to continue. If you get the reversal and they didn't come get you, those sons of guns. I will write a strongly worded email to somebody and talk to him about that. But Roy, do you remember, is Roy still in here? Roy was like, can you put your limit order before the reversal bar even prints? Yeah, you can, because you know the pattern. Jen, it's a great look. They just didn't come get you. All right, Jared. Got in above divergence at 68.20, out at 68.33. All right, Jared, can we do a little, just nothing to do with the trade at all? Nothing to do with the trade. Okay. So you don't want to annotate? Is that what you're telling me? Great trade, Jared. I get it. There's times where you don't feel like you have to show your work. I was one of those people too. If I get the answer right, why the hell do I have to show my work? So, but Jared, I don't know if I've said this yet in the room, so I'm going to repeat it once. When you take the time to annotate your chart, Jared, I don't care. You do whatever you want. I'm not the boss of you. Let me be very, very clear on that. I've been teaching people to read indicators and to learn how to take their reads and translate them into successful trades for almost 6 years now. Okay? And Jared, where did you get in? Where on this chart did you choose to take an entry? I don't have any idea. You picked a number, 6833, right? So let me show you where my brain goes. Was it here? Was it here? Was it here? I have no idea. 6820. The same is true. Even more so, was it here? Well, Jared, you didn't help your case, brother. Did you enter right here or right here? Did you enter right here or right here? Did you enter right here? So I've got 5 options on the large chart that match the price that you told me. Which one was it? I don't know. And if I go to your small chart, 6820, it could have been here, it could have been here, it could have been here, it could have been here. So I'm struggling, Jared, not with anything that you did, but my inability to understand how you did it. Does that make sense? So for me to give you the best feedback, I need you to give me a little more. And if all you give me, Jared, is I got in right here, and I got in right here, and you don't tell me anything else, Jared, I can say, wow, you had momentum, you hadn't reached trouble, and all you did was just jump into this trade with all those advantages. And if you got out here where you saw trouble, what a beautiful trade. But what we've done, Jared, through annotation, large chart has odds favorable momentum and a clear path. I let the small chart clear the divergence high, jumped in, held to trouble. Now, Jared, I have a recipe. How do I make $133 a pop every day for the rest of my life? Well, there's my recipe. There's my checklist. I've just defined it all the way from what I need to see to where I'm going to do it and how I'm going to exit it. Does that make sense? The annotation's not for me. I can look at any chart you put in front of me. You circle a spot, I'll tell you everything that's going on that chart. The annotation is for you. Now, physics, I don't care about physics. Physics doesn't work into my daily life. Physics may not work into your daily life. When I took math classes, I was an English lit major. I just wanted to get to the end of the road. That's it. What you're doing is you're creating a business, and you're writing a business plan to help you find success. So if that's what you did, if my guess on what you did is accurate, awesome. Beautiful. Way to embrace advantages. But if you got in here and held through all of this nonsense and then got out up here, well, that's a different discussion, right? If you got in here against triggers, that's a different discussion. So the annotation's not for me, man. The annotation is for me to give you feedback because I want you to be successful. Whether or not you choose to accept it, whether or not you choose to partake is totally up to you. Miss Jen, everything says up, momentum, path. Well, look at that. You jumped in and got out of trouble. Jared, that might be your trade. Previous chart did not get me, so I jumped the fudge in. Momentum trade, not enough room to target. Hit target 1, Out at reversal, late entry, moving price, back a bar, clears trouble. Jen, I didn't even know you posted this one. And Jared, I didn't know that Jen posted this one. Does that look something like what you were thinking? Pretty cool, right? That's a trading plan. That's repeatable. I love it. Jen, nice job. And Jared, if that's the one you took, nice job. All right, Miss Claire, I've watched market flow video and I'm so confused. Is this a one up, one down? Let's make it so my old eyes can see it, Claire. All right, Miss Claire. Yes and no. Yes, because this is the pattern and you nailed it. No, because the market is going up with strong triggers. So what you're actually seeing is one down and one up. So in an uptrend, Claire, on market flow, when you have those strong triggers, this is a pattern that you can use for management. And all it is my market is absolutely screaming and I get one down bar and one up bar, and then it just continues screaming. And I like to use these personally. I'll put my stop behind the up bar. So you recognized it really well. And what happens is you've got so much information on that chart. Let's go to this one and see if we can find an example again, because it repeats itself very often. Well, when there's momentum, it tends to repeat itself. And here we go right here. So at 8:35-ish. Oh, this was right at news. So when you're looking for that pattern, Claire, and let me know if this makes sense, please. This market has odds favorable, momentum up. I'm messing things up here. This market is going up, separation, good. This market, separation, odds favorable. And Claire, just for grins, let's say that you entered the market right here. Let's say that I used the wrong thing. So let's say, just hypothetically, you get into the market right here. And Claire, you're saying, I believe this market's going up there because of the momentum. Are you with me? Your initial stop is down here where you felt like the market shouldn't go. And you're like, I don't want to leave that much risk on a trade. Everything still says up. Everything is strong. Life is good. That down bar followed by the up bar, that's your stop movement. Does that make sense? Sometimes we overthink it, but all it is it's literally what it sounds like. It's a down up in an uptrend, or it's an up down in a downtrend. And that pattern sets you up for a beautiful momentum trade right here. So you can use it for management. And also, when you've got momentum on both charts, it sets you up for that momentum style trade. Great question. On the range charts, Claire, and again, this is one of those things where on a Renko chart, on an 8 range chart, those up downs are so much easier to read. And you were watching videos on market flow using Renko charts and range charts. It looks a little different on the minute charts, and it's a little harder to identify on the minute charts because you don't have the boxes around the bars and all that sort of stuff. Does that make sense? So it is going to be a little different look than you're seeing, and that's where you're just going to have to do a little translation. Keep asking the questions, we'll do the translation. No term, missed 2 ticks of support qualifies as a termination condition. Well, yeah, and this goes back to, right? You've got a new boyfriend, Claire. Don't freak your husband out with this one, but write on a piece of paper, it's a new boyfriend. I gotta figure him out. It's the same concepts, it's just presented a little bit differently. So Paul asks, and this is a great question, a very common question. Hey, Mark, it missed the fib by 2 ticks, right? That qualifies as a termination condition, doesn't it? And I'm going to say, Paul, you have to make that decision. You have to decide whether or not you want to call that a termination and start looking the other way. I say, because these single lines are built from thousands of calculations, I'm pretty good with 2 ticks off. And when I'm taking profits, I'm usually 2 or 3 ticks above support or below resistance because they are areas. If you're using it to define whether or not you want to try a 50-50 trade, Paul, very often I'll go to a smaller, faster chart for kind of a tiebreaker. If I have 3 divergences or a couple divergences down here right near that key area, I'm pretty comfortable saying, yeah, that was a termination. It was just the area concept. Does that make sense? But if it just flies from the middle of nowhere and no chart gives any indication that that was coming, I'm led to believe that they still may try to get down to that fib. Awesome. Nothing worse than telling a rules-based class sometimes you have to make a judgment call. All right, Miss Claire, how to use these signals? Don't. There's your answer. Don't. I've said this to a lot of people. If your rules don't include it, don't use it yet. You mentioned that I have a lot of that on the market flow. How do you streamline? Claire, what do you say we work through this one together? Because unfortunately, I don't know the answer. Let's go take a look. So mine appear to be gone. Nope, they're not. Strong reversal. So that is probably a product of trigger lines, maybe. So let me look at my trigger line settings. Background colors, trigger line colors, label price on scale. Let's go to inputs. Draw triggers only. That's not it. Visibility. That's not it. Okay, so it's not that one. Let's see. Maybe it's in the chart prime. So let me look at the settings here. Inputs, signal mode, trend, turning, fast warning, dynamic reactor, max profit, take profit. So all I'm doing, Claire, is I'm looking for something that says strong, weak, reversal, and I'm not sure where it's at, I'm not going to lie. Jason may be able to help you streamline that. Fibs and 1-1s. I don't think it's in the divergence potential. I thought it had to do with the trigger lines. Let's see if it shows up on this one. Miss Trina, have a good one. Wayne, you too, man. Thanks for being here. Yeah, we're running over, huh? Did you? I love that. It's very humbling when I can teach intelligent people. And I'm humbled every day. Every day. Watch this. So Trina, the way you did it to me, I'm going to do it to my brother. And my promise to you, Claire, is as soon as I get the answer, I'll share it with you. But I hate to say I don't know, but I don't know yet. So I just dropped it over where all of my tech guys hang out, and I dropped it into John Novak's chat personally. And as soon as I have an answer, I'll get it to you. Guys, let me end today's broadcast.